multilateral trade problem the U.S. has with a bilateral fix. And thirdly, there are clear alternatives to negotiating with China in terms of market access, cyber, innovation, forced technology transfer, and the whole structure of the engagement. And there will be some tough but very realistic proposals put on the table to address the issues that, with China that the U.S. finds most difficult.
Okay, but how will Democrats, play with China if they come into power? Professor Roach, it's unclear to me exactly where they stand on it. I mean, in the past, a lot of things, maybe in the form they do it differently, but in the substance, do they not agree with what President Trump is trying to do?
No, they don't agree with what he's trying to do. He's trying to beat China down and contain it. I think the standard view of the Washington establishment, the global establishment, is that there are issues with China, but China has to be held accountable for complying to those issues. China has accounted for 38% of the global growth since 2007. The world gets that. A world without China is a world that cannot recover from the coronavirus, period. So it's not as if, well, we all know that China's a bad actor, and Trump, we don't like his tactics, but we certainly like his endgame. I don't think the world understands that comment for a second, and I think there'll be a big effort made to rethink that proposition.
Do you think we'll get a stimulus package in the U.S.? Will Democrats and Republicans find a way? And if they won't, who will it, disfavor in the election?
So there will obviously be a stimulus package. Again, this is just an indication of the polarization in our politics. No party wants to stand for re-election having denied American voters who are hurting the support they need. So the Republicans will cave. There's no question about it.
Stephen Roach, I want to switch gears. We talked to Bono Boesia of UBS earlier, and he was very Rochian. That's a phrase, folks, they use at Yale University. You're Rochian. And Rochian, folks, is a respect for balance sheet dynamics versus income statement dynamics, which is a fixation, particularly of the business media. Stephen Roach, are we missing here the balance sheet dynamics of this great crisis? Are we missing with the Fed, with this fiscal policy, the balance sheet challenges to come?
Yeah, absolutely, Tom. I mean, let's just take my favorite metric of balance or lack thereof in the United States, the net national savings rate, the combined savings of businesses, individuals, and the government sector adjusted for depreciation. It stood at 2.9% on a revised basis of national income before the pandemic hit. It's going into record territory right now because exploding budget deficits are more than offsetting the boost in household saving. What that means is a massive record current account deficit, and it's one of many reasons why I have taken a very strong and bearish view on the U.S. dollar, which has been very weak in the last few months.
Okay.
And I think this is the early stages of the dollar's decline.
I'm upset, folks, because I want to do like a 4-hour conversation on this. You don't hear this too often about net national savings, but this is like Econ 101 with Dr. Roach. Okay, Steve, that's great, but the constraint on that, as Martin Feldstein said for years, is that weak dollar call is stronger euro, just as one example. When does strong euro impinge on euro exports? When do we get back to almost Plaza Accord like dollar weakness here?
Well, look, the dollar's got a long way to go to match the 33% drop that occurred during 1985 to 1987.
Fair.
So there's plenty of downside to go, and I think that the surprise in the euro, from my point of view, and I'm a congenital euro skeptic, has been this breakthrough on pan-European fiscal policy and the pan-European sovereign bond issuance to come with it, which came with this remarkable compact led by Angela Merkel and Emmanuel Macron a few weeks ago with the Next Generation EU fund. And so as Europe now finally has a fiscal policy to go along with its single currency and central bank, the European Monetary Union now satisfies finally the conditions of an optimal currency union, and that's a big deal for a country and for a currency that's undervalued rather than overvalued like the dollar.
All right, we'll have plenty more in Europe. Thank you so much, Stephen. Stephen Roach there of Yale University and author of Unbalanced, the Codependency of America and China. Now, coming up, we'll have plenty more conversations on China and these renewed tensions. On balance of power, Ralph Schlosstein, he's Evercore co-chief executive and co-chairman. That interview coming up 12 p.m. in New York, that's 5 p.m. in London, and this is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. Boeing will make deeper job cuts than the 10% originally planned. The playmaker is preparing to offer buyouts to employees for a second time this year. Most of the offers will go to staffers in Boeing's commercial airplanes unit, services division, and corporate operation. The jetliner market has plummeted since the start of the pandemic. Now, Oracle is considering a bid for part of TikTok's business. Bloomberg has learned that the company has approached other parties to partner in an offer for the viral video streaming app, including venture capital firm Sequoia Capital. Microsoft has confirmed that it is in talks with TikTok owner ByteDance. And Elon Musk keeps climbing his way up the rich list. The entrepreneur is now the world's fourth richest person after Tesla shares jumped 11% yesterday. That boosted Musk's net worth by $7.8 billion. According to the Bloomberg Billionaires Index, he's now worth $84.8 billion. Only Jeff Bezos, Bill Gates, and Mark Zuckerberg are worth more. And that's your Bloomberg Business Flash. Tom Francine.
Thank you so much, Rika. Now, coming up next, we talk to Oliver Chen. He's Cowen Senior Equity Research Analyst. So we'll have a look, of course, at some of the big names out there. We'll look at sectors and we'll look at retail. This is Bloomberg.
esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Bloomberg Surveillance. Good morning, everyone. Tom Keene above Home Depot here at 731 Lexington Avenue. This is a corner of Lexington Avenue and 59th Street in New York, and we're right above a Home Depot, which, let me tell you, when you go out front of it on 3rd Avenue every day, Francine, it is jam, 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 with a lot of construction trucks as well. Francine, is there a Home Depot equivalent in the United Kingdom?
Yeah, there are a couple of DIY shops, Tom. Of course, you know, the biggest one is also in France with spin-offs here. You know, Homebase is the big one here, but we've seen an increase in sales as well. People have more time, I guess, instead of buying a new home because of COVID-19 and the pandemic. They kind of, you know, renovate. They do it themselves. Not everyone does it correctly, but certainly that's why you're seeing a surge in sales.
They don't let me in the store with a bow tie on. Okay, right now, we want to move from the fabulous Home Depot numbers. I mean, just terrific. 28% per year shareholder return over the last 10 years. That's Apple-like, and they get none of the credit for it, to the state of retail. No one I know does that better than Oliver Chen. Oliver Chen is at Cowen, and he can come to you from his house with a suit, the snappy suit on, but he's wearing the fashionable shorts underneath as well. We know that this morning. Oliver, give us the state of retail. Francine and I see the boarded up windows and the luxury trauma. They're tearing up Tiffany's and all that. Where's retail and luxury retail in 6 months or a year? Do you have a clue?
Well, we really think consumers are focused on value. So we love Walmart, Target, Costco, as well as grocery outlet and off-price retail. That will be a key theme. Grocery continues to be very strong, as well as home and do-it-yourself trends. So curbside pickup at Walmart and Target, that's really a winning strategy in terms of customers adopting it and using it and driving about 50% e-com growth at both.
All of our viewers know that every price ticket is up. At Home Depot, the price ticket was up 10% as well. Are we accepting the higher prices at grocery?
Well, Walmart will not be undersold. It's everyday low price strategy. So there's a great value there. There is some food inflation, so it's something to watch. But consumers will look for the best bargains, and margins will have lack of upside due to both COVID costs, fulfillment costs, as well as competing on price. That's why Costco is a great option too, because their markup is extremely limited, and that's their business model. It's a membership model.
Oliver, is there just too many options out there? Do you think we'll either see a consolidation phase or actually some retailers will have to go into liquidation, maybe the smaller ones?
Yeah, for sure. Apparel is having a lot of problems, as well as enclosed malls. We think enclosed malls could go down to 600. And as department stores close, other stores will have to close too. So there's bifurcation happening in retail, as well as consolidation. That's certainly happening in apparel. And then, as you know, with LVMH and Tiffany, it's also happening in luxury goods too. So the big will get bigger and the strong get stronger. As we think about grocery at large, automation, robotics, fulfillment, those are very important long-term characteristics. And a company as well capitalized at Walmart is doing a very good job aggressively expanding there too, as consumers will expect more speed, more delivery options, and robots will be important to really making this happen at a profitable manner.
Robots to deliver the goods, Oliver, or is it actually robots in the warehouses? You know, what happens to the real estate?
The whole connected store. I mean, the purpose of the store is really changing. Lots of store closures in the shopping mall. And the grocery store, what's happening is when you use curbside pickup, there's robots that really conduct micro fulfillment and enable the Walmart to pick and pack goods at an inexpensive price. Robots inside the store that identify inventory. So a real connected store. Over the next 5 years, there's a real revolution happening with humans and robots and that whole consumer experience.
Oliver Chen, single best buy right now, what is it?
We like Target this week. The valuation is less expensive than Walmart with a better growth algorithm. And we think that the private label, as well as Drive Up and adding more services there, is a great long-term strategy.
Very quickly here, can they develop Home Depot-like same-store sales?
Well, we're forecasting a 6.5 comp this week, a 50% e-com growth. So we think that momentum can continue. High single-digit, low double-digit EPS growth at Target as well.
Oliver Chen, too short a visit. Thank you so much. Greatly appreciate it with Cowan. Just terrific store-by-store analysis of each of the brands out there. Fascinating there on the changing work-from-home America, the pandemic America, and retail. He's a lieutenant governor. They're all different. Garland Gilchrist is in Michigan. He's the DNC vice chair for the soiree, the virtual soiree going on through the week. David Weston with great coverage with Kevin Cirilli of all those events. We will speak with the lieutenant governor of Michigan. The ebb and flow here as Mr. Biden looks to November. This is Bloomberg. Good morning. Futures up 6. Home Depot up as well.
you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg First Word News. Bernie Sanders all but begged his progressive followers to vote for Joe Biden last night. The former presidential candidate spoke on the opening night of the Democratic Convention.
But let us be clear. If Donald Trump is reelected, all the progress we have made will be in jeopardy. At its most basic, this election is about preserving our democracy.
Sanders acknowledged that Biden's healthcare plans fell short of his vision, but he touted the proposal nonetheless. House Democrats will propose an extra $25 billion in funding for the beleaguered Postal Service. Bloomberg's learned it will be part of legislation that would prohibit cutbacks in service before the election. A vote is set for Saturday. Democrats want the post office strengthened before millions of election ballots are mailed. And in California, 10 million people avoided a blackout when temperatures fell. They may not be so lucky today. It's supposed to hit 108 degrees in parts of the state. That could force rolling blackouts designed to save the power grid. It's the first time California has resorted to the blackout since 2001. And in Hong Kong, Chief Executive Carrie Lam says she's having trouble using her credit cards after U.S. sanctions were imposed. The Trump administration sanctioned Chinese officials and their allies in the city. That was in response to those sweeping new security measures that Beijing imposed. Lam calls the measures against her totally unjustified. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. Tom Francine.
Ritika, thanks so much. Greatly appreciate that. What an interesting historical moment if you study politics in America to see the virtual nature of this original political season. Let's listen to the events of last night at the Democratic National Convention.
To everyone who supported other candidates in the primary, and to those who may have voted for Donald Trump in the last election.
The failed federal government that watched New York get ambushed by their negligence and then watched New York suffer, but all through it learned absolutely nothing. So today, 6 months after it began, the nation is still unprepared.
Imagine if we had a national strategy. So everyone who needs a test gets one for free. So everyone has access to a safe vaccine.
More than 150,000 people have died, and our economy is in shambles because of a virus that this president downplayed for too long.
The truth is that even before Trump's negligent response to this pandemic, too many hardworking families have been caught on an economic treadmill.
Some of the voices, the established stars of the Democratic National Convention, and those on the up and up. And one of those is from the key state of Michigan. He is the double-degreed engineer out of Ann Arbor, Garland Gilchrist. He is lieutenant governor of the state of Michigan, and he is vice chair of the Democratic National Committee. You know the math. You know it better than anybody in the party, Garland. You got to get out the vote. How are you going to get the kids out, and how are you going to get blacks out from sea to shining sea?
Well, thank you for having me today. And this is exactly the question that Democrats are looking to answer in Michigan and around the country. To put it in perspective, Donald Trump won Michigan by 10,704 votes. But Gretchen Whitmer, our governor, who you heard from last night, from a UAW union hall, from a manufacturing facility, her and I won Michigan by 400,000 votes, or 10 points. And we did that by simply showing up and making sure that every voter heard from us in every part of the state. And when you talk about black voters in particular, you know, Joe Biden and Kamala Harris are running on the most progressive agenda for opportunity and racial equity that any president's ever run on. And we can tell that story, as you said, from sea to shining sea.
Well, you can do it from sea to shining sea, but let's go west to Kalamazoo, Michigan, where they used to build checker cabs. Okay, it's a different Kalamazoo than it was now. How do the Democrats win in Kalamazoo if they're going to go progressive liberal? How much do you have to shift to the center to take Flint and to take Kalamazoo?
You got to never shift. You stay with your values. And even in Kalamazoo, we just saw this week, the far right neo-Nazi Proud Boys were demonstrating on the streets of Kalamazoo, and they were met with resistance from people who were stepping up and calling for racial justice and racial equity. They were stepping up for an agenda like Joe Biden and Kamala Harris and saying no to the rhetoric and the division and the danger and destruction and death of Donald Trump. And so I think in Kalamazoo, in Grand Rapids, in Macomb County, all places where Gretchen Whitmer and I won in 2018, we laid out the blueprint. And I'm proud that Joe Biden and Kamala Harris are ready to pick up where we left off and take it to the next level.
Lieutenant Governor, good morning from London. If we don't have a new stimulus package, who will your voters blame, the Republicans or the Democrats?
I think that Michigan voters have been clear for this entire crisis that Donald Trump is not only a failure, but his failure, his lack of a national strategy, has led to dead Michiganders that did not have to die. And this is personal for me. 23 people in my life have died from COVID-19. They all have stories like the people whose stories we heard about last night. They will hold this president accountable. And you heard Governor Gretchen Whitmer talk about responsibility. Leaders take responsibility. They don't run from it. And that's exactly what Donald Trump has been doing. He's denied, he's lied, he's shirked, he's shrunk away, he's hid from the problems rather than stepping up and solving them. But I'm not worried about that with Joe Biden and Kamala Harris. And Joe Biden has showed up for the people of Michigan, for the people of Detroit, time and time again over the years. I think it's what he's going to continue to do here.
But Lieutenant Governor, if that's the case and people think that, then it wouldn't be at all a contested election. Do you worry that people say that they'll vote for Joe Biden and actually vote for Trump? Do you worry that the polls aren't really reflective of what people will do come November?
I think that we always have to consider this to be a close election because it was so close in 2016. We have to work hard, and as I indicated before, we have to talk to every voter. And the Michigan Democratic Party and the Democratic Party across the country never stopped talking to voters after 2016 because we knew we had a lot of work to do. And you're going to see the evidence of that. In Michigan, we've been able to connect with people because we knocked on their doors in 2019. So when we had to stop knocking doors in 2020, we could keep calling them and keep text messaging them. Our movement is strong, and I believe it's going to deliver Michigan and across the country. And we have to run through the finish line. So no, we're not going to rest on any laurels or any polls. We're going to continue to work all the way through November so that we can have the privilege of working and leading on behalf of all the American people in January.
Was that the difference the last time around? You've mentioned twice in this conversation, Lieutenant Governor, the idea of showing up in campaigning. Is a stark reality that Secretary Clinton did not campaign to the greatest advantage 4 years ago?
Well, I think that what we need to focus on is how we can connect with that local community intelligence. Rather than relitigating 2016, what I think we need to focus on is the fact that we learned a lot in 2018. Here in Michigan, for example, Governor Whitmer visited all 83 counties of our state. When I came onto the ticket as her running mate, I visited 40 counties myself. It's about showing up and about being present. And you saw with the virtual convention, we have to get creative about how to do that safely in COVID-19. And I think what you saw is how that creativity can lead to real human connection, to elevate the stories of people and of voters and of Americans. And that's what we have to focus on here. We have some really creative tactics we're excited to roll out to engage voters of all stripes, to make sure Black people maximize turnout, to make sure the suburbs turn out, to make sure our Latino brothers and sisters turn out. And I'm excited that we're going to have record-breaking turnout this year. And when more people vote in Michigan, Democrats win. And we are not afraid of that. We want everyone to vote safely and to vote by mail.
We look forward to further updates. Lieutenant Governor, thank you so much. Mr. Gilchrist, of course, from Michigan. He's the vice chair of the Democratic National Committee. We will have coverage through the night. David Weston starting strong in the 12 noon hour. Kevin Cirilli on radio at 5 p.m. It's a really complete day of politics here at Bloomberg, and that culminates at 10 p.m. tonight with our coverage of the Democratic National Convention. In the markets, futures up 6, yields in. Home Depot, stunning. Maybe they should do the ballots. Maybe they should do the mail-in ballot debate. Home Depot killing it. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I think existentially, China is the main threat we face throughout the 21st century. I think Russia is also a strategic problem because of its nuclear capabilities. I think the immediate problems remain the threat of the proliferation of nuclear, chemical, and, as we now understand better than ever before, biological weapons and international terrorism. These are problems we've had now for 20 years. They've changed some of their manifestations, but they remain threats to the United States.
Good morning, everyone. John Bolton with us. He was with us a few weeks ago on his book, and that was controversial to say the least. Yesterday, remembrances of Brent Scowcroft, who has died here. General Scowcroft, with his contribution to the end of the Cold War. Ambassador Bolton quite eloquent on that, and particularly on his visit to Belarus in the last 2 years or so. I thought John Bolton was particularly prescient on the challenges, the turmoil that we see between Poland and Russia, the land of Belarus. Carla Freeman with us right now of Johns Hopkins, the executive director of Foreign Policy Institute and a professor of Chinese studies. As well, Carla, what I find interesting about what Ambassador Bolton said there is not China-U.S. or Russia-U.S., but the thing we never talk about, which is the relationship of China and Russia. You know, in our childhoods, that was a huge deal. Is the relationship with Russia and China as fractious as it was then?
It's certainly become a much closer relationship in recent years. Of course, we remember fears of the China-Russia partnership, their alliance, of China's first alliance forged on Valentine's Day in 1950, and that lasted until the late 1960s and was a major feature of the Cold War. After the split, of course, that helped create an opening for the U.S. and China relationship to develop. But in recent years, China and Russia have become closer, even working out emerging tensions in Central Asia, which is the region which both countries have substantial energy and other strategic interests in.
Dr. Freeman, we talked to Dr. Roach of Yale University about this, Stephen Roach, earlier this morning. Let me ask you the same question. Is the final result of Washington policy, of Trump policy or Biden policy, will they be all that much difference in regards to China?
That's a really compelling question, and I think that what will happen in the Biden administration is that many of the concerns that the Trump administration has raised will carry through to the Biden administration. But I do think that the Biden administration will look for grounds to cooperate where it can with China, so that we have continue to have competition, concerns about technology theft, and other worries about China's authoritarian push around the world. But we will try to find areas where we can work together. There are so many global issues that require U.S.-China cooperation.
But Carla, what you're saying is that the Democrats won't necessarily be more sympathetic to China, but they'll just do it in a different form, or do you think that they will find actually common ground on things that's significant like trade?
Yes, I do think that the Democrats come from a tradition that recognizes that globalization, or appreciates globalization as a source for economic growth. And I think that a Democratic administration will look for ways to restore an architecture for international trade, also look for ways to deal with issues that are important to a Democratic administration, like climate change. Of course, one of the first actions that the Trump administration took was to withdraw the U.S. from the Paris Climate Accord. So there are areas where the U.S. and China have worked productively, have seen their engagement together, if you use that word, has yielded significant benefits economically and also in terms of managing global threats to human security.
Carla, what can you tell us about Chinese vaccines? So there's this global race. Russians say they have a vaccine against COVID-19. Where are we on China? Will the Chinese even use the Russian vaccine?
I am not sure about whether China would use the Russian vaccine. There are a lot of questions about whether that vaccine has gone through adequate testing. China's in a big push to develop a vaccine and is in, I think, third phase testing of that vaccine, and it's already setting up plans to distribute the vaccine, sell it widely around the world. There are a number of companies in China with hopeful signs of being able to launch a vaccine fairly soon.
Thank you so much to Carla Freeman there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information, and tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up right here on Bloomberg Quick Take, Anthony Fauci, the National Institute of Allergy and Infectious Diseases Director. That's streaming live tonight on Twitter, Facebook, and YouTube, 1 p.m. in New York, 6 p.m. in London. You don't want to miss it. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. Citigroup's $900 million mistake is facing scrutiny on two fronts. Bloomberg's learned that regulators want to know how Citi accidentally paid the money to Revlon's lenders. Meanwhile, the bank is suing one of the recipients, Brigade Capital, to try to get the money back. The world's largest sovereign wealth fund lost $21 billion in the first half of the year. That represents a 3.4% decline for Norway's wealth fund. A rebound in stock markets wasn't enough for the fund to erase its record drop earlier this year. And SoftBank has bet $3.9 billion on 25 tech giants from Amazon to Tesla. The Japanese conglomerate has invested more than $1 billion in Amazon, its largest holding. SoftBank founder Masayoshi Son is expanding the company's investment activities from private startups to publicly traded equities. And that's your Bloomberg Business Flash, Francine.
Thank you so much, Ritika. Now, new Hang Seng inclusion, WuXi Biologics, reported first half net of about $106 million, with shares up around 7% since Friday. Well, WuXi Biologics chief executive Chris Chen spoke exclusively with Bloomberg's Tom McKenzie and David Inglis, where he spoke about the company's M&A plans and goals to bring the production of COVID-19 antibody treatment closer to global clients. Here he is.
We are a global company enabling anyone to work, any company to work on the COVID-19 treatments. Currently, we have more than 10 programs ongoing right now. They are not vaccines yet, they're mostly antibodies. So this is used to treat the very sick patients or to prevent the COVID-19 diseases. We are very fortunate. We have already enabled 3 programs in the clinic. We have a couple more to go in the next couple of months.
Okay, in the next couple of months, does that suggest to you that by the end of this year, you will have some antibody treatments then for this virus?
Yeah, it's very likely. So we already have a couple of clients from US, from Singapore, from Europe, and from China. Their goal is actually to be able to get the product approved by end of this year.
A lot of Hong Kong-listed Chinese companies have taken this opportunity to raise money on the mainland as well. I'm wondering whether or not that's something that's within the radar of the company of perhaps listing some of your shares on the Chinese mainland.
That's not in the current plan. Again, we have been well recognized by the global investor. As you mentioned earlier in the program, we just been added to the Hang Seng Index. So it's a great recognition for our efforts in really developing the biotech industry, empowering global companies to discover, develop, and manufacture biologics to treat patients like the COVID-19 pandemic right now.
So, Chris, you talk about that cash that you have on hand. As you look to expand, David, of course, touched on this. Are you looking then in terms of capacity to expand capacity? And if so, what would that mean for CapEx? And are mergers or acquisitions something that you're looking at as well?
Yeah, we are spending about $1 billion in US and Europe to build our supply chain, to make sure the medicine we developed can be manufactured at large scale. So we're talking about, we're talking about biologics, and rarely you talk about biologics in metric ton. Our goal is to be able to make metric ton scale of medicines in US and in Europe. And because of that, we are investing about $1 billion overseas. And we are, as you mentioned, we have plenty of cash to do that. We have a very active plan to look at all the companies out there we can potentially partner with. So we have a very active M&A plan. And as you know, earlier this year, we acquired a facility in Germany from Bayer. So that's it's very active. Yeah, we'll announce it as it goes through.
Chris, what fits your portfolio then in terms of acquisitions or possible acquisitions?
We typically look at mostly the facilities, because we build our technologies ourselves. We have what we call the platform, and then we want to build a manufacturing facility closer to our customer. So there will be facilities in US, in Europe, in Singapore, and in China. That's our goal. So the earlier Bayer acquisition, that was the facility acquisition from Bayer. That was a very typical example of what we wanted to do in the near future.
On the revenue outlook, Chris, I'm just looking at your financials here in renminbi, of course. 1.6 billion revenue 2017, 2.5 2018, almost 4 billion as of last year. Do you think you'll get to 10 billion in annual revenue by 2022? Or is that too early?
we have a very aggressive plan. We'll see how we can achieve. But we near term this year we think we can grow at least 30%, and hopefully in the next in 2021, 2022 we can actually grow faster than this year, because we were hit by the COVID-19 pandemic this year.
Well, that was the WuXi Biologics Chief Executive, Chris Chen, speaking exclusively with Bloomberg's Tom McKenzie and David Inglis. Now, this is what investors are looking out for today. European equity markets were actually down, and today, right now, they're kind of moving sideways, slightly even edging higher. U.S. equity futures doing the same, investors looking past these fresh tensions between Washington and Beijing over Huawei technology to focus on other things. For example, they're looking at the number of infections across the world. The dollar gauge also sliding to the lowest since 2018. I'm also looking at iron ore futures rallying to the highest since 2014, and then gold climbing back above $2,000 an ounce. We'll stay with Bloomberg for our continued coverage of the Democratic National Convention. Our Kevin Cirilli is fronting that. That's tonight at 10 p.m. in New York. Coming up, more Bloomberg surveillance.
Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
The rapidity
with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
The market is totally divided from the real economy.
When you look at it, there's only so far that the market itself can go without the stimulus.
Yes, we're printing money here in the U.S., but we haven't really seen that velocity of money actually enter the system yet.
Every minute that goes by is compounding the losses.
This is the end of the 39-year bond bull market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Tom Keene, John Farrow, and Lisa Abramowitz off today. Anna Edwards with me in London. And Anna, absolutely extraordinary, truly, to see the two Americas out there. I want to get to the layoffs at Marks & Spencer in a moment, Anna, but with futures up 8, and they just advanced off the Walmart news that is out. And I'll tell you, folks, this is the story, the business story of this pandemic, the digital success of Amazon. We see today the whole DIY, that's it. I've never been in a Home Depot. The whole Home Depot, excellent, 28% per year total return there. Huge same-store sales beat at Home Depot. And now Walmart out with a digital statement from Walmart of up 97% at their online store. So Walmart doing a nice beat here with 9-ish% same-store sales. Granted, it's a different mix than Home Depot. And Anna, what is so important here is to color it versus the Boeing further voluntary layoffs or the stunning statement of the traditional Marks & Spencer of England, where I believe, Anna, 1 in 10 will be shown the door.
Yeah, absolutely. 1 in 10. They're hoping to do this, though, through voluntary redundancies and retirements and the like. But, you know, will they manage to get to that number? So 1 in 10 will be leaving. Interesting you pull out those Walmart numbers that hit just now, because food was a bright spot at Marks & Spencer's, but it's a much broader retailer. It historically has sold a lot of clothing and homewares, and that's where the problems have been. And obviously the online shift, Tom, that all of these retailers have structurally been dealing with pre-pandemic, so pre-COVID-19, all of that comes with some costs as well for these retailers. They need to reposition their businesses for a new world. It's a really complex Tuesday here. Our simulcast, we welcome all of you on Bloomberg Radio and Bloomberg Television worldwide. We get a lift. Futures up 8, Dow futures up 119. The VIX is a really stunning 21.22. That is a key statistic. To see a 19 handle on the VIX, unimaginable even weeks, certainly months ago as well. Yields come in and really noting dollar weakness today with the DXY a nice 92. Weaker dollar, certainly one of our themes. Anna, give us the themes that you see this morning. Yeah, we'll get to the weaker dollar, won't we? We've got an FX voice coming up later on in the program. We'll certainly pick up on that. I'm very focused here in Europe this week on the rising level of infections, in particular in Germany. We're seeing the highest number of cases in Germany in some 4 months. And the focus here on Europe is ongoing moves, even at the margin, to restrict people's movement, to stop the further spread. Of course, it's summer. Plenty of people want a vacation, want to take holidays across the continent, and many countries taking action to try and stop the spread going with those tourists. So that's a big theme. Retail's a big theme. Let's get to the morning brief then, Tom, and look at what is coming up this morning. 8:30 a.m. we're going to get U.S. housing starts for the month of July. We had some housing data yesterday, so that follows along from that. Today we're going to hear from President Trump. There might be a big focus on the Democrats this week, but President Trump has certainly not been silent. He was yesterday accusing Joe Biden of being a socialist and a fascist, I think. Anyway, he visits Iowa and Arizona, and then we turn to the DNC, to the Democratic National Convention. That's at 9 p.m. Later on today. We have a host of household names, even in London, even where I sit. Many people have heard of most of these people. So Chuck Schumer, AOC, Alexandria Ocasio-Cortez, of course, Bill Clinton, and Jill Biden all will be speaking.
It will be interesting to see day two. Certainly all saying the technical success of this virtual experiment, really something yesterday. So we got futures up 9, and that is a lift over the last hour as well. And maybe it speaks to market. I got to speak to my bow tie here. For those of you on Bloomberg Radio, the bow tie needs adjustment this morning. Steve Chiavarone is at Federated Airlines, and what is so important about what Mr. Chiavarone does is he writes really important notes of the international balance that's out there, and then what to do with your investment capital. We're thrilled he could join us from Federated Airlines this morning. Steve, you know, I look at your note, which is basically, hey, everybody, wake up. The U.S. isn't as bad as all. And does that mean that you and the team at Federated stay hugely U.S.-centric?
No. Actually, for the first time in a while, we've closed some of our underweights internationally. I think that the big story that's out there in the marketplace that's hiding in plain sight, but it's the big driver, is collectively large parts of the world are exiting recession. The stay-at-home recession is most likely ended in a lot of places, and we're entering recovery. And in that environment, value parts of the market are likely to catch up. And when you look at European indices, when you look at developed non-U.S., there's more value in those indices. So it's not a story about growth rolling over and dying. It's not a story about the U.S. doing poorly, but we think international can start to catch up.
This is so important, Steve. You and I have talked about it before. Let's review it right now. I think it's of such great importance. It's not about tech down and value up. It's on a relative basis, just the value starts to do better, right?
Yeah, and within value, right, you have to separate that between the survivors and the dyers, right? Almost all value was a loser from the pandemic. The question is, which companies are going to survive? Because those companies are going to take share from those companies that don't survive, and they're going to be re-rated higher when they're no longer being priced for, you know, pandemic and recession. And so we think there's a lot of alpha to be generated on the value side if you can engage in good research and pick the right stocks.
Steve, good morning to you.
Good morning.
What is it that what is the catalyst that drives that move into value then? Is it a vaccine? And what will be the definitive vaccine news that sort of steepens the yield curve, drives people into value here in Europe?
No, I think the vaccine is part of this, but let's make no mistake about it. It's not an investment strategy to pray for a cure-all. I think any vaccine we're likely to get is more flu vaccine than smallpox vaccine. I think the big catalyst here is just the end of the recession. If you look at PMIs, if you look at retail sales, if you look at housing activity, they're all showing economic recovery. Labor markets, they're showing recovery. That in and of itself is a catalyst. Now, what will confirm it is if we continue to see the 10-year yield remain firm or firm. And that was what was different in this past value run than the head fakes we've gotten before, is you got 20 basis points of 10-year bond yields up, which you didn't get before. So the bond market's telling you it also thinks that things are normaling, as is the dollar. The dollar weakening is a sign of normalization. You're taking off that safety trade in large part.
And we'll get to the dollar shortly, perhaps. I'm just looking at the year-to-date moves on some of these big stock indexes, and many in the US, well, the Nasdaq and the S&P, notably, of course, have turned positive year-to-date. Europe really drags behind. Is that just a function of sector exposure, a function of being more driven by value than growth? Or does Europe deserve that kind of discount right now?
I think it deserves a discount, and I think it's largely because of the sector exposure. When you look at the S&P 500, it has, you know, significantly more tech and comm services. When you look at, you know, the Euro stocks, you've got a lot more financials, you have a lot more energy, you have a lot more big pharma, and so I think that's a part of it. But I also think that there have been some overhangs in Europe that are starting to lift. You're seeing a little bit more fiscal cohesion. Up until, you know, last day or so, the virus data has been relatively well behaved, and then I think that dollar weakening also helps make, you know, international markets a little bit more attractive for U.S. investors.
So what are you actually doing to deploy capital? I want to talk here about a broader institutional idea here at Federated about what sectors actually matter now in terms of participating in the market, Steve, but not getting my head handed to me if I get it wrong.
Yeah, that's exactly right, and it's going to be an interesting answer, and it's small caps actually. Small caps is a way of playing this cyclical rotation, but even if the value story doesn't materialize as much as we think it may, small caps have another way of winning. In the first year off of a recession bottom, small cap equities tend to outperform large caps by about 25%, 25, which is a big boost. They benefit from low rates, and we think they'll benefit when the Fed ultimately announces average inflation targeting. They benefit from a cyclical pickup. And we think longer term, they benefit from a manufacturing renaissance in the center of the United States. So we've moved overweight to small caps, particularly on the value side. We've closed our underweight internationally, and we remain overweight equities. Those are the three big calls that we're implementing or suggesting that clients implement through their portfolios.
And Steve, what drives that manufacturing renaissance in the center of the United States that you refer to? In your notes ahead of our conversation, you talk quite a lot about population dynamics, and not to sound too Malthusian about it. Is it as simple as that, or does that not play well with our ESG credentials? Do we need to find other investment themes other than just where's the population going to grow most?
No, but I think population's a big driver. It's not the only one. I think in the long run, the drivers of economic growth are, in fact, population growth and innovation. And remember, companies went to China primarily for cheap labor, 10, 20 years ago. But when your factory is more technology and less labor in terms of input costs, what you're left with in China are higher shipping costs, higher energy costs, not enough intellectual property protection, uncertainty on the Korean Peninsula. Hong Kong's gone from the financial capital of Asia to a state of rebellion, and there have been some transparency issues, at least around the beginning of the pandemic. By contrast, when you look at the center of the United States, and I would include Mexico here and parts of Canada as well, but the center part of North America, you have easy shipping routes to great end markets, one of the lowest tax rates in the world, abundant energy, geopolitical stability, even in these kind of crazy political times. And we think that for a lot of reasons that becomes an attractive emerging market, and I think policymakers on both sides of the political divide are going to encourage that.
Well, Steve, thank you so much for being with us. Steve Chiavarone here, Federated Hermes, with us this morning with really interesting nuance there on the equity markets. We're going to do that in bonds as well. Futures up 7, Dow futures up 100, a nice lift off the Walmart news. If you're just tuning in, Home Depot with spectacular same-store sales, and then Walmart really, really not bad as well, and it gives a lift to the market. I'm not going to overplay that, but nevertheless, a lift to the market with that, the yield 0.68%. On fixed income, Robert Tipp will join with PGIM, their chief investment strategist. We hit equities, we hit bonds. We do that on radio and television. Anna Edwards and Tom Keene, good morning.
With the First One News, I'm Rishka Gupta. Bernie Sanders all but begged his progressive followers to vote for Joe Biden last night. The former presidential candidate spoke on the opening night of the Democratic Convention.
But let us be clear. If Donald Trump is reelected, all the progress we have made will be in jeopardy. At its most basic, this election is about preserving our democracy.
Sanders acknowledged that Biden's healthcare plans fell short of his vision, but he touted the proposal nonetheless. President Trump added a trip to Iowa to his schedule today. His support has been slipping in a state he won by 9 percentage points in 2016. Polls now indicate Iowa is up for grabs in the race with Joe Biden. China is denouncing the latest U.S. limits on Huawei technologies. Beijing calls them nothing short of bullying. The Trump administration moved to curb Huawei's access to commercially available chips. Its goal is to prevent adoption of the company's 5G technology. President Trump told Fox he doesn't want Huawei's equipment here, quote, because they'll spy on us. And in Canada, Finance Minister Bill Morneau has resigned after a rift with Prime Minister Justin Trudeau proved impossible to repair. That leaves Trudeau with a major hole in his cabinet in the midst of a recession. Bloomberg's learned Morneau's replacement will not be former Bank of England Governor Mark Carney. Carney has been advising Trudeau on an economic recovery plan. And Amazon is making a bet that the future won't be all work from home. According to Dow Jones, the world's largest online retailer is expanding its physical offices in 6 U.S. cities. The company will be adding thousands of corporate jobs in those places. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Years later, the state of this nation is very different. More than 150,000 people have died, and our economy is in shambles because of a virus that this president downplayed for too long.
Michelle Obama, the former First Lady, with quite a statement to end the first night of the virtual convention. Joining us after virtual sleep, Kevin Cirilli, our chief Washington correspondent. Kevin, we could go for an hour here over the political experiment that was wrought last night. Let's start with the theater of it. Was it successful?
I think former First Lady Michelle Obama, from the details of the vote on her necklace to her eyes glossing over when she spoke in passionate terms, really was one of the only individuals and really, I would argue, sets the template for how these virtual conventions ought to go. She didn't have to play to a stadium. She played to your cell phone. That could be replayed one-on-one, and it was a very inviting tone. If you're not going to have a crowd, take the Michelle Obama route and do that. I thought every other speech was somewhat interesting, but really you could get the sense that they wanted to speak to a crowd and they just weren't there.
I mean, Kevin, I got to jump forward here to what the Republicans are going to do to respond to this. I know it's only the first night as well, but how do you envision the Republican exercise that we get after a virtual Milwaukee?
Well, I thought we've seen a little bit of the murmuring behind the scenes that many of these speeches last night were pre-taped. I think the president's going to be speaking now from the White House, so we don't know whether or not there will be any supporters there, any socially distanced supporters there. The president has given several addresses over the last several weeks, both at his golf courses and in public appearances in which there have been small crowds that have been gathered. So that, you know, to a president who really does like to speak to a crowd, that could change things in terms of the contrast. But from an ideological standpoint tonight, freshman Congresswoman Alexandria Ocasio-Cortez, she's set to address the convention. And, you know, you contrast that with some of the speakers next week. It really is a really interesting dynamic between the economic vision of the two parties.
Kevin, good morning. It's really interesting what you say about Michelle Obama kind of mastering the medium. Every actor finds it perhaps a challenge to move from, you know, stage to screen or screen to stage, and it is a very different experience, a different art form, I suppose. So interesting if they can learn from Michelle Obama's performance. So what do we get today? You mentioned some of the people who will appear. Last night seemed to be the Democratic Union or unity was on display. You know, parts of the left, the progressive side trying to look more center. Tonight we hear more of the progressives. Will they also try to keep with that slightly more centrist line?
Well, in addition to Alexandria Ocasio-Cortez, who speaks, of course, after Senator Bernie Sanders, who even in his remarks said that he does have differences with Joe Biden, and he does have differences in terms of their health care plans, but that ultimately it would be a better choice that from the Democratic Socialist perspective. I was struck by how Senator Sanders laid out the vision, and in particular with what he had to say about this notion of fascism, and look to see how AOC tonight, whether or not she adopts those and makes the case in that way. Former President Bill Clinton will speak tonight, as will Dr. Jill Biden, of course, Joe Biden's wife. But even with Bill Clinton, I think back to 2 conventions ago when he got up there on the stage and gave what was interpreted as a barnstormer speech, went off script, went off prompter, and really let it rip. And the political class applauded it on both sides of the aisle. It was this sense of here's a former president who can break through the barrier for a convention crowd. How will he play in a one-on-one medium?
Really interesting. Kevin, in speaking with David Weston yesterday, and folks, we're hugely advantaged at this network that Weston and Cirilli are from battleground states. They viscerally get this. Who in your Pennsylvania were they speaking to last night?
Well, there was a great article in the New York Times called "What Joe Biden Can Learn from Connor Lamb," in terms of how to win back Pennsylvania. I thought, personally, Governor Kasich's statements, based upon my reporting, had Republicans more nervous last night than Senator Bernie Sanders. The Republicans, here's why. Republicans that I spoke with all throughout the day yesterday said they're going to tie Bernie Sanders to Joe Biden. They're going to tie AOC to Joe Biden. But Governor John Kasich, here's a Republican governor speaking on the crossroads, so to speak, and really making a pitch. And for his part, President Trump yesterday telling reporters just shortly ahead of the speech that he thinks Kasich is a quote-unquote total loser.
Is Mitt Romney going to speak to the Democrats?
You know, Senator Romney's, you have to remember, Senator Romney and President Trump, their relationship as it dates back to 2016, we all remember the photograph of whether or not he was going to be Secretary of State. And then you get to the notion of President Trump endorsing Senator Romney in Utah. So, I mean, they have had a storied relationship. A storied relationship.
So give us the rest of the week, Kevin, as you will. I know we're going.
Kevin,
oh, excuse me, Anna. Go ahead. I'm sorry, Anna. Excuse me.
No, I was just picking up on exactly what you were discussing there. The Republicans coming out for a Democrat contender here. How usual is that, Kevin? I mean, how often do we see this trick played? It seems obvious. You need to appeal to the middle ground, and so you get somebody from the other side to try and do that for you.
And I think that's where the virtual convention medium really is it has to be frustrating for Democrats, because here you have a governor of a battleground state, being and speaking in a field that was shot by a drone. And so I think, you know, that on this virtual campaign trail maybe didn't have the effect that they were going for, but it is still incredibly notable nonetheless.
We'll see another night of this coverage. Kevin Cirilli, thank you so much, our Chief Washington correspondent. Anna, I'm sorry I cut you off there. I usually do that to Pharaoh, and he's not as polite as you are. So, you know, I'm sorry that I
That's okay. That's okay. It happens when we're working transatlantically, doesn't it? We stumble over each other. But I thought, I mean, he was appearing in a field filmed by a drone, but it was a very symbolic crossroads he was standing at, I'm sure.
It is different. The smartest thing Kevin Cirilli said there, folks, is this idea that's completely foreign to me of playing to a cell phone. My earliest memory of this soiree, Anna, is the 1960 convention where I was allowed to stay up late, like to 8 p.m. and, you know, see 4 minutes of the black and white TV as they tried to invent this, really out of 1948. This is 1960, the JFK soiree, which transfixed Boston at that time. We're going to continue here.
But playing well on a cell phone, I mean, that speaks to your skill set, Tom. You know, we're used to staring down the barrel of a camera.
Well, we'll see. I mean, again, Michelle Obama last night, and we'll see what we get tonight. David Weston with our coverage there on the convention. And of course, Kevin Cirilli through the day as well. I really can't say enough about how we're approaching this at 10 p.m. with topics that are a little bit different than you'll see other places. Robert Tipp will join us with PGIM. We need to talk about yield and also the real yields that are out there. We do that with a 10-year yield in just a basis point, 0.67%. The real yield back. I missed the show, The Real Yield. I missed it a lot. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Bloomberg surveillance from London, from New York, a simulcast on Bloomberg Radio and Bloomberg Television. And with the data this morning, yeah, it's an August churn. It's a churn Tuesday, but nevertheless, some interesting trends out there. The VIX in through 22 to 21.32. NASDAQ leading the way on a percentage basis with S&P futures up 6 points. I do want to point out persistent dollar weakness. It's maybe not what it was 2 hours ago, but nevertheless, Euro dollar printing a 119 yen, 105.57, really triangulating out to a weak dollar. Stephen Roach, obviously the invention of Morgan Stanley Economics, now at Yale University, really calling for persistent weak dollar here off the larger macro trends of the nation. Anna Edwards with us today. John Farrow out, Lisa Bramlett's out. Anna Edwards getting the short straw here. Thrilled that she could be with us. And Anna, we've really ignored something which for America is so easy to ignore, but I think you and I need to speak for a few minutes about our reporting with Tori Clark out of Moscow about Belarus, sandwiched between Poland and Russia. It is a critical point of Tuesday and into Wednesday tension, isn't it?
Yeah, absolutely. Yesterday, incredible scenes of President Lukashenko, who he says won an election. Protesters say it wasn't valid, and the EU says the election wasn't valid. He was at a tractor factory that would typically be very supportive ground for him, and he was booed, he was heckled, he was told to resign. Yeah. No sign that he is resigning just now, but certainly really interesting to see that risk assets didn't panic when we saw President Putin said he would lend support to Belarus, maybe not to Lukashenko. I caught up with Alexander Baunov of the Carnegie Moscow Center earlier, and he said that Moscow might be happy to see some transition away from Lukashenko. It's not the same as Ukraine, as we discussed yesterday.
In our reporting out of Minsk as well today, really showing the manufacturing and business sector is on strike. Obviously, they're the protests, the images that we see from Minsk. And for those of you on radio, I can only say that there's a loneliness here in the imagery of the leader. And as Anna says, you wonder where this will go forward. So on Belarus, this is something that our Eastern European team and those in Moscow are monitoring. We spoke of equities earlier with Stephen Chivarone of Federated Hermes, and now with PGIM, and I should say the award-winning PGIM in fixed income. Robert Tipp joins us, their chief investment strategist. What do I make of the real yield, Robert Tipp, other than John Farrow's show is award-winning? What do I make of the inflation-adjusted yield in America right now?
Yeah, well, this is a difficult time for people to figure out their bonds. There's no doubt. The yields are low, the real yields are negative, and it's hard for people to wrap their minds around what that means. I tend to focus on the nominal yield, and I think that looking inside the yield curve, that those are likely to remain where they are. If the Fed is going to succeed, that is going to be measured in terms of their pushing up inflation expectations. I have a colleague, Kishlide, he likes to think in terms of the real yield. What he would say to me, Tom, is that if they succeed right now, break-evens are below 2%, and the Fed wants to target a PCE of 2. The CPI, which is what break-evens trade off of, and you're going to have to bear with me 1 second, right? It's a little involved. CPI is usually higher than the PCE. So if the Fed's PCE is going to be 2, the CPI has got to be above 2. If the CPI is above 2 and the market believes it, your 10-year real yield, which is at -1, it's got to be at -1.5 or less. So real yields are negative, and one sign of the Fed's success is going to be, does the market believe inflation is going to go to target? It didn't believe it before this crisis. It doesn't believe it now.
What you just heard there, folks, is an adult conversation on bonds. We've heard this across the show. I can't say enough the value of John writing at Breen Capital and what you're hearing from Mr. Tip of PGIM. The way this is reported and fixated on in the media is wrong. I don't know what else to say. It was literally the first project I did for Matt Winkler at Bloomberg. You take the nominal yield, as Mr. Tip just did, and then you look at the inflation expectations, and the residual is the real yield. So with that said, Robert Tip, what would you suggest nominal yields will do?
So my comments here have been that the front end of the curve, like your 5 years and in, are a little bit expensive, but they're going to stay down here. The Fed is beating the drum, and we may get a little bit of a W type recovery, a little bit of a setback on growth and deceleration. The middle part of the curve, the 10-year, is going to be in this 40 to 80 range, depending on whether people acknowledge that W or are seeing it, or whether they're getting a little more optimistic and they pushed up to 80. The back end of the curve, again, diving back inside of the yield curve, I'm sorry, those forward rates that you love, what's priced in terms of where treasuries are going to be 10, 15, 20 years from now are way too high. They're in the mid to high 2% area. They were above, and we had a correction a few months back, but they're back pushing 2%, which says your bond yield is too high. So we're looking for stable to flatter yields on average, which means treasuries are going to be outperforming cash, and that's before you even get to spreads. And spread product is trading ahead of the economy. It's gotten very optimistic. It's priced that in. But that's probably going to continue to be the case on balance the next 12 to 24 months. So this is a bond market that looks sick, to people from the outside, but when you dive inside of it, you look at what's going on in the economy, what the trajectory is likely to be, zero cash is going to be a low hurdle for the bond market the next 12 to 24 months.
So, Robert, you expect good morning, you expect a steeper curve. What is the biggest threat to that view? Does a vaccine change that? What would be the definitive bit of vaccine news that might threaten, sorry, you expect a flatter curve. What would change that from a vaccine perspective?
Absolutely. So that is, the thing is when you have that burst of optimism on a vaccine, when and if that hits, we get to the far side of this, then, could you see 10 shoot up to 1% to 130 or even higher, depending on how effective, how quickly things can normalize and so on. But at the end of it, right now, we've had, not even, a 50% recovery in employment, and incomes are being sustained by benefit payments. And what we know from past recessions, even in this case, if it's more rapid, it's going to take a very long time to get incomes elevated. And right now, consumption is at a record level. We printed record retail sales, but incomes are quite depressed. And that, speaks to a gap that's going to be filled by some falling back. So there's going to be a lot of back and forth. We've seen a lot of rapid fluctuations in the market. I think that you can have bursts of optimism that will temporarily push yields up. But in the long run, the world we were in before this crisis hit, let's say that's what the world looks like with a vaccine, you were looking at sub 2% price in inflation in the treasury market that needed to be a few tenths higher, if the market was going to believe. So you're going to need a vaccine, and you may need something like a renewables boom on an energy platform. The U.S. may be joining Europe and their push for green and decarbonization. Something, rightly or wrongly, whether you like it or not. that gets you a Y2K type economic boom to get you sustainably over 1% in the 10-year Treasury. Otherwise, you're not going to see it. It's going to be a stable to flatter curve grinding as these secular dynamics of high debt demographics, keep these yields low, keep bond returns boosted.
Okay, so we came from a low-yield environment. The virus hasn't changed that necessarily. We go back to still a low-yield environment. But as we look for this news flow surrounding a vaccine, Robert, from the perspective of the bond market, should we see this as a very binary thing? Like, here's some good news on a vaccine that works from a Western drugs developer, and that perhaps would be seen positively by investors? Or should we get a bit more granular than that, dig down into, how long is it going to be effective for? And there'll be a lot of questions, won't there, as soon as we see that knee-jerk market reaction?
That's right. That's why you want to give that nightmare to people like you to follow and for me to try and trade, because the underlying dynamics, that long-term secular backdrop, is going to remain unchanged. And in fact, if anything, it's worsened as we've gone through this crisis, and it's going to continue to. The deceleration in workforces, those things are just really beginning. So that dynamic is going one way. In the short term, you're going to get these pops in optimism, and they're going to provide trading opportunities. But I don't think it's going to change your secular environment of being below 1% on the 10-year in all likelihood.
Robert Tiff, thank you so much, particularly that discussion on nominal less inflation expectations deriving the real yield. Mr. Tiff with PGIM as well. I look at this and I look at the debate, and it still just comes down to the abject fear in England and Britain, I should say, and in the United States of negative interest rates. And that idea is still out there given weak aggregate demand.
Yeah, we saw some weak data coming through from the UK on the labour market and indeed the GDP numbers, and increasingly the market started to price in rate cuts here in the UK. We haven't got much rate to cut if you don't want to go negative, and that doesn't seem to be the way that people are assuming we go. But yeah, there is a conversation still about lower rates here in the UK.
What is a 131.70 doing to sterling in London? What's the effect on Britain of a 131.70 sterling?
Yeah, well, I mean, I suppose if you're exporting, if you're trying to be global Britain, if you're trying to strike trade deals, and all of those exporters perhaps suffering there. Interesting to watch sterling as we head towards the end of the year. We'll talk about this perhaps with our FX guest later, Tom. I spoke to a guest on FX earlier on who was saying there's going to be so much noise around sterling, plenty of trading opportunities as we head towards the end of the year.
This is absolutely fascinating. I really can't say enough, folks, about the importance of these conversations. If you assume weak dollar, whether it's a Steve Roach weak dollar or just the normal zeitgeist there of finally the resiliency of the dollar giving up, what are the strong euro, strong yen, strong sterling, what levels do they really begin to impinge on those nations? And that's really opened a great debate. I've heard any number of people say on euro, well out through 120 to a stronger 130, 140. George Saravelos at Deutsche Bank was beneficial on that. And Shahab Jalanus is well scheduled to be with us this morning. On oil, let's remember $45 on Brent crude is pretty much churning here. Gold buttressed right up against record highs. Robert Dahl of Nuveen, we continue the discussion this August. This is our simulcast. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Michelle Obama described President Trump as unfit for office on the opening night of the Democratic Convention. The former First Lady blasted him for mishandling the pandemic.
More than 150,000 people have died, and our economy is in shambles because of a virus that this president downplayed for too long.
Obama said that Trump is clearly in over his head. House Democrats will propose an extra $25 billion in funding for the beleaguered Postal Service. Bloomberg's learned it will be part of legislation that would prohibit cutbacks in service before the election. A vote is set for Saturday. Democrats want the post office strengthened before millions of election ballots are mailed. In California, 10 million people avoided a blackout when temperatures fell. They may not be so lucky today. It's supposed to hit 108 degrees in parts of the state. That could force rolling blackouts designed to save the power grid. It's the first time California has resorted to the blackout since 2001. In Hong Kong, Chief Executive Carrie Lam says she's having trouble using her credit cards after U.S. sanctions were imposed. The Trump administration sanctioned Chinese officials and their allies in the city. That was in response to those sweeping new security measures that Beijing imposed. Lam calls the measures against her totally unjustified. And shares of Walmart are rising. The world's largest retailer posted stronger than expected quarterly revenue. Sales were led by soaring online orders and its market-leading grocery business. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Non-tariff action we've seen hasn't primarily been Republican, but it has been bipartisan. And so I think that doesn't change. And those pressures that kind of gradually push the US and China apart, particularly with regards to capital flows, I think will continue whoever is in the White House.
Stephanie Kelly, Aberdeen Standard there with an important comment on China. What Anna Edwards and I want to do, John Farrell and Lisa Bramwitz off today. We welcome you to our simulcast here on Bloomberg Radio and Bloomberg Television. What Anna Edwards and I wanted to do was just pause on a Tuesday in August of 2020 and recalibrate on Hong Kong. We can do that with Karen Lee. Of course, she's been wonderful with us, our China government editor, to give us perspective here on Asia, on China, and also her Hong Kong. Karen Lee, I think of the Blue Ridge of the 7th Fleet visiting Hong Kong Harbor, showing the flag of a year ago, or maybe it was 18 months ago. It's just, it's become unimaginable now that a member of the 7th Fleet, a ship of the U.S. Navy, would visit Hong Kong Harbor. That's truly unimaginable, isn't it?
Yeah, I mean, we've had a pretty busy series of events here over the summer, and especially over the last year, and you and I have talked about it a lot of times. But Carrie Lam today, in the latest twist here, said that she's having trouble using her credit cards after the Trump administration imposed sanctions targeting Chinese officials and their allies here in Hong Kong, obviously including her. And, you know, this is something that I think a year ago even would have been absolutely unimaginable. Even as we saw 2 million people come out on the streets of Hong Kong, even as we saw the U.S. back those protesters, to see the change that's happened here, even in the last 6-7 weeks under the new national security law imposed by China, where you'd see the leader of this city under U.S. sanction is really unimaginable for people, and really speaks to how much of a change the city has gone through and how much of a change the relationship with the U.S. has gone through in such a short time.
And Karen, I thought that Tim Kalpin absolutely nailed, folks. I haven't gotten it out on Twitter yet, but Mr. Kalpin, writing on Huawei, and he writes from Taipei with a huge technological bent. But Karen Lee, the further step of the Trump administration yesterday on Huawei, again, another shock.
Yeah, I mean, it's almost hard to keep up these days when we wake up in the morning, but China had some pretty strong words for the Trump administration's latest move to add 38 Huawei affiliates in 21 countries to an economic blacklist that built on restrictions that they had previously announced. And China called it nothing short of bullying at what's become a more and more important regular foreign ministry briefing here in Beijing today. It said the government opposes, quote, the discrediting of Chinese companies such as Huawei. And, you know, Trump told Fox that he doesn't want Huawei's equipment in the U.S. because, quote, they spy on us. He told that to Fox a couple of days ago. But Huawei has repeatedly pushed back against those types of allegations worldwide, that its technology is used for espionage. And China's going to continue pushing back against these moves by the Trump administration as we see tensions between the two guys.
Karen, good morning. When you look at the response we see from the Chinese government, do you sense that the Chinese government is expecting things to change in November? Is there a sense that they anticipate, well, a change in leader in the US? And if so, will that change the stance to China? Or do they see that this will continue under any leader in the United States?
You know, it's a very opaque government, and they haven't commented very much on that. What they have said repeatedly is that they don't plan to interfere in the U.S. election, that the U.S. election is an internal matter, and that echoes rhetoric that they've used to talk about everything from their domestic matters to matters in Hong Kong, saying this is an internal affair, and they've used that same rhetoric to describe the U.S. election. So at this point, it's hard to know what China is thinking about that. But what is interesting is the optimistic notes that were struck on both sides in the wake of this move by the U.S. on trade, despite the U.S. decision. Wilbur Ross saying that talks with China continue on various levels. And last night in Beijing, no less than Foreign Minister Wang Yi also struck this optimistic note as he welcomed staff back from the closed Chinese consulate in Houston, which was, of course, another major point of tension between the U.S. and China. And he said he believes relations with the U.S. will be, quote, reborn from the ashes. So maybe we can take something from that.
Yes, and it didn't result in a big sort of sell-off in risk assets, which from a market perspective was interesting as well, Karen. We were hearing from Stephanie Kelly there about the perhaps what will look like, what will become separate financial systems, separate capital flows into the future. Is there a sense that in China that is being prepared for? They've talked for a long time, of course, about a bigger role for the Chinese currency globally.
I seem to have some technical difficulty there. Of course, you're going to have that when you go to Hong Kong by telephone. It's happened not a few times as well. And I look at this, and of course, it devolves back to London, the emotion that we've heard over the different weeks from Lord Patten and others in the United Kingdom. How would you perceive that the Johnson government will adapt to this new Hong Kong?
Well, the big story here, of course, was around Huawei, but also around the opportunity for those living in Hong Kong to seek some kind of residence in the UK. There has been a pathway for UK citizenship for some time, but it wasn't taken up by very many people, wasn't open to that many people. And that has been opened up, and that has also been highly criticised, as you would expect, by the Chinese. How many people will actually, in the event, seek to move away from Hong Kong and to come to London remains an open question. But interesting to see that Britain still does feel some emotional, even if there isn't a sort of legitimate geopolitical reason to be involved, some sort of emotional reason to.
Yeah, I'll be honest, folks, I haven't adjusted to it, maybe with the way nobody's traveling now, but it is certainly a new China and something that we'll have to learn when we have the opportunity to go there and see a clearly changed Hong Kong. I want to reframe the markets for you on this Tuesday because there's some real nuance out there, and it really starts for those of you waking up on radio, on television, with Home Depot and Walmart just killing it within their earnings report. These are two very different companies. Over the last decade, Walmart has given you 12 or 13% return, way above nominal GDP. But Home Depot has been flat out Apple-like with a 28% total return per year over the last 10 years. That's an extraordinary statistic and performance by the House of Langone. We had a lift to the futures. Futures up 8, now up just 4. Maybe that indicates a churning in August, but within that, there's been some decided movement, and part of that movement is a continued ascent of the NASDAQ and the decrease of the VIX. The VIX 21.40. It'll be fascinating to see how that performs today. And even with futures up 4, Dow futures up 32. On a percentage basis, the NASDAQ futures up a solid 30 points, showing a great relative performance. Again, the dollar weaker, 92.52 on DXY is a major story. You see that against the pairs all morning. Excuse me. All morning, euro dollar printing above a 119. That gets your attention as well. We look at the equity markets, particularly for those of you in the triple leveraged all cash fund. Robert Dahl will explain to those of us that have missed. I'm looking for a point of entry. Maybe Bob Dahl will have it. Stay with us on radio, on TV. This is Bloomberg.
since COVID ianze hatujakuwa tukienda kazi, so maisha imekuwa ngumu na inazidi kukua ngumu. So swali yenye tunajiuliza, kama hii imefika 1 million plus na situation cases bado zinaendelea kuenda juu, zikifika 5 million tutakuwa aje?
Hizi gari za biashara tumekosa pesa ya kulipa, hata the more inaonekana inaendelea, hata tutabidi turudi ushago juu biashara imeharibika kabisa, hata tujui tutafanya namna gani.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The market is totally divided from the real economy.
When you look at it, there's only so far that the market itself can go without this stimulus.
Yes, we're printing money here in the U.S., but we haven't really seen that velocity of money actually enter the system yet.
Every minute that goes by is compounding the losses.
This is the end of the 39-year bond bull market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Good morning on Bloomberg Radio, on Bloomberg Television. Hard rain last night in New York, but a beautiful New York today. You know that on Bloomberg Radio all across the eastern seaboard. Good morning in Washington and Boston. Early good morning out in San Francisco, and to all of you across this nation on Sirius XM Channel 119. We say good morning. We also say good morning to Anna Edwards in London. Why are we doing this? It's August. Farrow's off. Abramowitz is off. I'm in, and I had a star tantrum, and they said, who do you want? And I said, I want Anna Edwards if she can possibly extend her day as well. And here she is. Well, Anna, I got to go right away. I'm going to go optimism here with Bob Dahl in a moment, with Home Depot and Walmart and all that. Explain to our American audience the place of Marks and Spencer in the United Kingdom psychology and what it means that 1 in 10 bodies will be shown the door.
Yeah, well, it's good we'll be turning to optimism because this isn't necessarily a very optimistic way to start the hour. But yeah, Marks and Spencer's, huge high street retailer that was on every high street here in the UK, and it's going to be getting rid of 1 in 10 of its staff, mostly through retirements and the like. But it is really significant. But it's not just about COVID-19, is it, Tom? This is a trend, a secular trend that has been affecting the retailers. And not only do they have to deal with the fact that a lot of their customers are migrating online, they have to migrate online. And that means costs. So they have to invest at the same time as trying to shore up the revenues.
What is the place of Amazon in the United Kingdom? Walmart, with that headline, folks, out up 97% on their online here with the pandemic and all. Frame Amazon, because the Wall Street Journal today, Anna, saying Amazon will expand out corporate office space in a number of many U.S. cities. Where does Amazon fit into that retail mix?
Yeah, huge presence in the UK, just like everywhere else, I suppose. A lot of talk for a long time about whether they team up with any grocers here in the UK, but not so just yet. But that's a big focus. Here in Europe, we're also really focused on the virus and the ongoing outbreak we're seeing across Europe, Tom. But really interesting that doesn't seem to be driving equities. We're driven by bigger, more global liquidity forces, perhaps, this August.
Yeah, it's an important headline and some research notes out saying there could be a length of time here of the various quarantines across a many part of Europe as well. Let me do a quick data check here to frame Robert Dahl. Futures are up 4. NASDAQ futures may be leading the way once again. Yields are in 2 basis points in the 30-year piece, a 10-year piece in 1 basis point, 0.67%. We've had some good bond conversation today, really smart conversation. Their dollar weaker, that is a change, and you see euro 119.06 really sustained. I've mentioned Turkish lira 2 hours ago, actually doing well, but clearly a battle for the Turkish government. Right now, I can round it up to 7.40, which is not good, and that's a weaker Turkish lira. We need to watch that through this hour of Bloomberg surveillance. Robert Dahl is an interesting guy. He's a guy who is smart on framing the why of optimism. And like our Gina Martin-Adams at Bloomberg Intelligence, Robert Dahl of Nuveen is one of those people that gives you courage to stay in the market so maybe you can make some money with Home Depot. Bob Dahl, you know that you have a stock and they sort of hang out and then they go up off news or something. How do you identify companies like Home Depot or Apple that just every quarter seem to do it and every quarter seem to go up?
Thankfully, I own both stocks, Tom. These are companies, first of all, they have products that are interesting. Second of all, they manage their business well. And third of all, they generate a bunch of cash. If you can find companies that do those 3 things rather consistently, generally you're going to be in good shape owning those stocks. I mean, the Home Depot news, the Walmart news, they're really good news.
I mean, I know you're a glass half full guy, but I want you to speak to the people who are not Robert Dahl. They don't have your experience. They don't have your sense of history. What do you say to the people that have missed the Home Depot boat? How do you get back on board with a total enterprise value to EBITDA that's not in any book you or I ever studied?
Yes. Well, first of all, you have to agree that a year from now, the stock market's going to be higher than it is today. That's my view, because the economy will be doing better and earnings will be higher. Maybe we'll have a vaccine. That doesn't mean we won't have short-term bumps along the way. But if that's the case, Home Depot is probably going to be higher a year from now than it is today. So dollar cost average into those stocks that you think are in the stratosphere and you've missed, if they have the propositions that we just talked about and aren't ridiculously valued. Home Depot's up a lot, but it's still not horribly expensive.
Bob, good to speak to you. I was reading some research today by the National Association of Active Investment Managers, and he talks about how even those who were previously bearish are just kind of giving up and joining in with this rally. Do you sense that you've got more company in your bullish view on where U.S. stocks head?
So I'm commenting about a year from now. I'm also in the camp, too many of us are, that we're a little ahead of ourselves in the short term. We've come a long way. We've retraced the entire bear market. Earnings today are nowhere near where they were when stocks were at the all-time high in February. So, and we have an election. We have a bill we can't seem to pass. Valuation levels are not particularly cheap. So I can make the cautious case. I don't see big downside. But those who are a little nervous, if you have a ton of cash, you got to step up and put some in my view. If you've been fully invested the whole way and want to take a profit or two, I'm fine with that as well. Markets don't go straight up in bull markets or straight down in bear markets, as we all know.
Bob, do you like European stocks at this point, or is it just about the US? I ask because I'm confused by the market reaction some days during August. We've got headlines aplenty about the virus ticking upwards in various parts of Europe, and yet that doesn't weigh on European stocks as if it's a bigger global liquidity story that's dominant. What do you make of Europe?
You just said it. It's the liquidity story for equities overall. The U.S. no longer has the interest rate advantage it had versus the rest of the world. And the U.S. is the most defensive market in the world. So if you postulate that the globe is going to do a little better economically, non-U.S. markets are probably going to do it better. And then you layer on top of that the dollar weakness we've experienced, and I think non-U.S. international stocks do a bit better. Europe's got a lot of long-term problems, as you know, but it's fairly cheap, and I think we'll continue to do a bit better here in the near term.
Bob Dahl, Nuveen is a TIAA company, and that is a venerable institution looking at the long term of investment. The leadership of Roger Ferguson is noted. What do you advise Mr. Ferguson and others about the actuarial assumption that we're all going to live with? What's our actuarial assumption reality?
Well, lifespans we know are getting longer. I had a friend who retired recently at 65, and he said, I guess I should go all in bonds. I said, wait a minute. He's married, and they're both pretty healthy. I say, at least one of you is going to live to 90. Don't run away from equities. There's no 25-year period where stocks haven't beaten other things. So we have to make sure people are aware of those sorts of things. The other actuarial assumption I think that we have to think about is what's the long-term return for, the traditional 60-40 blend. It's not going to be in the next 10 years, most likely, Tom, what has been in the last 50. Kind of,
right.
Nearly 10%. It's going to be much lower, and that's the reality that these long-term asset allocation programs are going to have to pay attention
and
to.
Bob Dahl knows I'm just setting him up for the second question. I mean, that's the act here, folks. Bob Dahl, the question is, if that's the reality of a lower actuarial assumption, do you go more diversified or less diversified, or maybe more general, how do you diversify?
Yeah, so you have to have diversification, but it's not just stocks and bonds. There are alternative assets that have to be considered in portfolios. Nuveen TIA, big investor in farmland, for example. And that's an area people don't even think about generally, but there's an area for diversification. Within the public markets, within U.S. equities, where I've spent my career, you've got to invest in companies that are going to make it happen. And so you might want a more targeted portfolio in an environment where the gains overall, the market's not going to lift every boat is what I'm trying to say.
There's some really important observations there, folks, against the canon of the last 20 years and how things are changing. Robert Dahl, as always, thank you. He is with Nuveen. Anna Edwards, these are really, really important changes that we see. And I go back, Anna, to that headline I saw last year in the United Kingdom. I think I was at the Net across from our offices having a beverage of my choice, and there was the actuarial assumption, Anna Edwards, under 4% on your UK annuity. That was unimaginable even 5 years ago. Anna, just extraordinary.
Yeah, I'm not sure I get to retire, Tom. I think we just all plan for our second life, reinvent ourselves after 65 instead.
Yeah, it's extremely well said, and that we're just extending out and sending out. I get messages on this from a lot of listeners and viewers, and trust me, folks, there's no retirement planned. Let me retire to the data check right now. Interesting today, nuance for a Tuesday. Futures up 4, Dow futures up 45. The VIX to me is a huge story with a 21.40. That's that underlying equity market led by tech. John Farrow's been great on this. That rotation, Dow, cyclical, industrial, small cap, international versus 8 glory tech stocks. I don't really know where that sits right now, but all I can tell you is maybe Home Depot, maybe Walmart are the new FANG stocks of the future. Just terrific numbers there as well. Dollar weaker, the euro, 119.05. 119.05. Wow. This is Bloomberg on radio, on television. Stay with us.
With First Word News, I'm Ritika Gupta. Bernie Sanders all but begged his progressive followers to vote for Joe Biden last night. The former presidential candidate spoke on the opening night of the Democratic Convention.
But let us be clear. If Donald Trump is reelected, all the progress we have made will be in jeopardy. At its most basic, this election is about preserving our democracy.
Sanders acknowledged that Biden's healthcare plans fell short of his vision, but he touted the proposal nonetheless. President Trump added a trip to Iowa to his schedule today. His support has been slipping in a state he won by 9 percentage points in 2016. Polls now indicate Iowa is up for grabs in the race with Joe Biden. And China is denouncing the latest U.S. limits on Huawei technologies. Beijing calls them nothing short of bullying. The Trump administration moved to curb Huawei's access to commercially available chips. Its goal is to prevent adoption of the company's 5G technology. President Trump told Fox he doesn't want Huawei's equipment here, quote, because they spy on us. And in Canada, Finance Minister Bill Morneau has resigned after a rift with Prime Minister Justin Trudeau proved impossible to repair. That leaves Trudeau with a major hole in his cabinet in the midst of a recession. Bloomberg's learned Morneau's replacement will not be former Bank of England Governor Mark Carney. Carney has been advising Trudeau on an economic recovery plan. And shares of Walmart are rising. The world's largest retailer posted a stronger than expected quarterly revenue. Sales were led by soaring online orders and its market-leading grocery business. Still, Walmart was held back by $1.5 billion in coronavirus-related costs. It also took a $380 million charge for job cuts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
sure there are Republicans and independents who couldn't imagine crossing over to support a Democrat. They fear Joe may turn sharp left and leave them behind. I don't believe that, because I know the measure of the man. He's reasonable, faithful, respectful. And you know, no one pushes Joe around.
Virtual political tension last night as a gentleman from Ohio comes out for the gentleman from Delaware, the governor in support of Vice President Biden. I'm sure we'll see much more of that over the number of days. David Weston and Kevin Cirilli with our coverage. Mr. Weston tonight, I believe at 10 p.m. There with continued coverage. Right now, we want to speak to someone not so much in the trenches, but steeped in policy and the changes of this nation. Basil Smikely is at Columbia, out of Cornell, and his PhD from Columbia, and now a lecturer of international public affairs there. But he's one of the people that actually does. Lots of people have the cable TV hot air of politics, but others are out there doing it. In the case of Dr. Smikely, it's within the charter school system and the acclaim of the Eagle Academy of Harlem, which is, I believe, expanded out to 6 schools now. Basil, you're all about the doing. Tell our viewers how the Biden-Harris team will do when they're elected.
Well, that's the open question that I think yesterday did a little bit to answer. You know, there was a lot of conversation about Joe Biden's character, this empathy, and what they tried to get across last night was that Joe Biden is going to be this empathetic, concerned leader that cares about everybody, right? That cares about folks across race, ethnicity, class, and of course, political party, in stark contrast to how others, particularly Michelle Obama, described the incumbent president, Donald Trump. Last night, however, was a little light on actual policy. The most that you got was from Bernie Sanders, who talked about healthcare and said, Joe doesn't really agree with some of the proposals I do, but I think we get closer to what we were planning if Joe Biden's in office. So very light on policy, though I do think, you know, if you have been following him over the course of the campaign, it does look like they're going to be more progressive. Not a sharp turn to the left, but more progressive policy. But last night was a bit light on some of the details.
I'm sure you're teaching this at Columbia, but so much of policy success is how you delegate within the process. How do you anticipate that Biden-Harris and their government, their administration, will delegate if elected?
Well, I think that's an interesting question, because if you sort of take last night as an example and see and pay attention to what's been happening throughout this pandemic, mayors and governors have had to assume a tremendous amount of responsibility for the work that they've been doing to address a lot of these issues without a lot of help from the federal government. I imagine that a Biden-Harris administration is going to have a lot better, a lot closer working relationship with governors and some mayors across the country than Donald Trump would. That's, I think, part of the message. It's been about cooperation, and it's been about partnership. And that's in part why you heard people like Governor Andrew Cuomo last night, the governor of Michigan as well, talking about how we can work with a Biden-Harris administration. So I think more intergovernmental cooperation, more funding support, and less sort of blaming and finger pointing.
Senator Schumer now over at CNN with a headline out, folks, talking about immigration, and it'll be in his speech tonight. Basil Smikely, you have lived what Senator Schumer is talking about. Of course, we're all immigrants at one point or another. How do you get immigrant Harlem and the immigrant Harlems across this nation? How do you get them to actually shut up and vote? How do you get the turnout that you need to win?
Well, listen, I'm a child of Jamaican immigrants myself, so there's politics steeped in our household growing up, and the truth is, I think every immigrant household understands this political moment, that they understand that their families potentially perhaps have been pulled apart. They understand and have come to this country for opportunity and are opening businesses and are helping build homes and build companies. And so the attack on them they understand all too well what that's about. And I think, you know, those who have become citizens, like my parents, are very eager to vote and be a part of the process. I don't think that there's a family that has come to this country that wants to take part in building this nation that isn't really attuned to the urgency of this moment. So I applaud Senator Schumer for the positions that he's taken and how vocal he'll be about it. But I will tell you that I believe immigrant families are going to be mobilized in this election.
Basil, good to speak to you today. If we look at the people in the middle of US society, if you like, who the Democrats are going to be looking to convince to come over to their camp or to possibly stay in their camp, which of the types of voters that have not yet been targeted, that the DNC and the Democrats afterwards, running up to November, really need to target to kind of win over to their side?
Well, I think there has been some concern in the Latino community that a lot has not been done. Not enough has been done to really engage those voters throughout this primary process. And I understand the concern about that. I also think that the pandemic played a huge role in that, in the sense that we didn't really have a full primary season as we would normally have it. But there are, I think, a lot of Latino voters and issues that pertain to that community that haven't really gotten a full airing. So I do think DNC and candidates across the country are going to have to lean in a bit more to bring those voters out. But I also think if you look at the voters that the Democrats have been chipping away at, the suburban voters, white women, older voters, those were in Trump's camp in 2016. Democrats seem to have been bringing them back to our fold. We saw that in the midterms in 2018. Hopefully there's a replay in 2020. And I think some of the Republicans that spoke last night that tried to address those very same voters.
Dr. Smickley, thank you so much. Basil Smickley with Columbia here. Much more to talk about. Really want to talk to him as well about younger kid education and keeping kids in school, where he's had huge leadership on that matter. Futures up 5, Dow Futures up 43. Tonight, David Weston with our coverage of the Democratic National Convention. It is a virtual convention. Schumer just out now in the headline saying he had real doubts about the modern convention, and said even the senator from New York was impressed with the process of it, the cadence of it last night as well. So we'll have David Weston with our Kevin Cirilli there on the convention. Coming up, and this has just happened moments ago, dollar with a further breakdown. You see it in DXY. I mean, sterling 131.90. John Farrow is not going to be able to afford. Wait a minute, he's paid in sterling. Wait a minute, Farrow's making out like a bandit. Sterling here pushing a 132 right now. Farrow, he's going to be able to buy an island nation. This is Bloomberg, Shahab Jalanous, coming up.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
Bloomberg Surveillance. Good morning, everyone. Economic data here with Michael McKee. I do want to point out markets are on the move again. There's some real pullback. Home Depot, Walmart, and dollar weaker right now, 92.30 on the DXY. Weaker dollar, a new bout of weakness there this morning. Michael McKee considers housing. Mike?
Housing big today, Tom. Housing starts up by 22.6% over the month of July. The number of building permits up by 18.8%. Looks like low interest rates are making a big difference here, Tom. And that is no surprise to anybody, I think, at this point. One of the interesting things that we're watching also is the number of single-family home starts, and single-family home starts up as well, because all this talk about how people want to move out of the city and get more room because they're going to be working from home.
Right.
Is there much more demand for builders? It looks like we're getting that kind of information from the report today. One other number I wanted to point out to you,
Please.
Tom. The New York Fed does the Empire Survey. We talked about that earlier this week. They also do a services survey. And remember, this is a service economy in the United States. Big drop in the New York Fed's survey of service industries, down to negative 17.1. Businesses more pessimistic in August than they were in July. That fits the narrative that the economy has started to stall again.
We welcome all of you on Bloomberg Radio and Bloomberg Television. We're going to pause here with Michael McKee. What you people don't know is Michael McKee and I met at a seminar of the National Association for Business Economics. I think Nixon was president. It was that long ago. And what we learned, we were at a seminar called Mean Reversion and the Square Root of N. Totally dry statistics. So, Mike, I ask you this question with great respect. Can we trust the economic statistics now? I got the gloom of restaurants closed, bars closed. Mark Zandi, the great economist at Moody's, says it's a 14% unemployed America. And then I got Home Depot up, Walmart up 97% in internet sales, and on. These housing numbers that are a boom. Mike, they don't fit together, do they?
Well, they sort of do if you're looking at numbers like from Home Depot. People took their stimulus checks, it looks like, and because they were stuck at home, decided to do some remodeling and fixing up of their houses. That's the narrative that seems to be coming out of this. Certainly you can trust the housing data in terms of the story it's telling us. It makes a lot of sense. Interest rates, mortgage rates plunged to the lowest ever, so more people want to buy houses, so builders are responding. The question is for Walmart and for Home Depot and others, now that that $600 extra unemployment payment has gone away, now that the $1,200 payment has been spent, do we continue to see some kind of retail sales growth? We should get numbers from Johnson Redbook, which is the weekly sales numbers, gives us some direction this week. And last week they were down 3.4%. Let's see if Americans continue to spend. This is the back to school season, of course. If they continue to spend, or if your kid's not going back to school, Tom, did you buy her any new clothes to wear?
I don't buy them anymore. They buy me. Anna, save me here with a question as I ponder my inability to keep track of my charge card.
Well, I'll save you from the question around women's save you from the question around women's clothing. Yeah, interesting, Mike, that you cite that that data on the services sector or and the doldrums there, because if you're not paying for a builder or a painter and decorator, you're doing it yourself. You're doing those home improvements that we talked about with Home Depot. But as you raise that question, let's go there about how long this lasts for, because you get this initial boost in the summer, these checks in the mail that people are very grateful for. But if that's not sustained, what danger then to the U.S. economy if we don't see a follow-up, a sequel to the CARES Act?
Well, different economists have different views. Mark Zandi has said that he thinks at this point we could lose 0.5 percentage point of growth from that in the next or in this current quarter, and it could get worse from there, because then you have a sort of cascading effect where people lose jobs and then they don't spend, and that money that doesn't get spent leads other people to lose jobs. So it is a potential downward spiral. That's why a lot of people have talked about the W as a symbol of what we might see in this recovery, and there's going to be a lot of pressure on Congress to do something if we start getting the high frequency numbers suggesting, as the New York Fed index does today, that we have a problem.
This is just breaking right now. We're going to have a little bit of time here for it because we want to get to Shahab Jalanus of Credit Suisse. Michael McKee, Mr. Carney had a job. I guess he lost his job. He was right-sized out of it in England, went back to Canada, and he will not serve as a new finance minister. Moments ago, CTV, this according to our Bloomberg headlines, of Chrystia Freeland will be the new finance minister for Canada. Michael McKee, this is someone you and I know well. Tell us a little bit about Chrystia Freeland.
Well, she started her career as a journalist, so there is hope for you, Tom, if you want to go into the government. She joined the Labour Party in Canada and has worked her way up. She was most recently foreign minister, but made her mark as the trade minister, the person who negotiated the new NAFTA treaty on behalf of Canada. She's tipped to be a potential future prime minister, and if she takes on the finance portfolio, just gives her that much more experience.
With your Ukrainian heritage, she is a different finance minister from usually the cut of the cloth that you see. Michael McKee, thank you so much for perspective on Chrystia Freeland and, of course, on his economic data. Far too long a conversation, stealing time from Shahab Jalanus of Credit Suisse. Shahab, good morning. Why is the dollar so weak over the last 5 days?
Well, look, we've had a 3-week consolidation phase in what we believe is a longer-term weakening trend. We are approaching, well, we're now within a month of the next FOMC meeting on the 16th of September, and markets do believe there's a decent chance of more dovish innovations coming through at that FOMC. And on top of everything else, you do have a situation where the fiscal stimulus extension talks are not going well. Our own economists think that a failure to pass a deal just in August can hit disposable income in the U.S. by around $50 to $60 billion. So that certainly sets the U.S. aside from many other countries that are chugging along in a relatively benign fashion at this point in time.
Good morning to you, Shahab. I'll add that into the response I got from Mike McKee then around what impact not following up on the CARES Act would have on the U.S. economy. Looking at what drives the dollar then, is it just, it's the things you mentioned there, is it also just risk appetite? And if there is more appetite for things that are not U.S. denominated, that are not American, if people go further afield, they have that kind of risk appetite, then that weighs on the dollar. Is that what we're seeing? It's generally trading around that theme.
I think that's an aspect of it, but of course, you know, with the dollar being a global funding currency, then yes, as long as global conditions are, as I said, relatively benign, it tends to gravitate lower as a rule. But things accelerate when you have a more active divergence process as well. And I would say the spat around the CARES Act at least creates the perception that that is possible. It may still be the case that they come back and come up with a deal, but the odds are obviously shakier than, for example, a country like Germany, where it looks like you're going to have a fairly smooth process when it comes to doing things like extending the jobs furlough scheme there by a whole year, which is what they're talking about, without really any stresses. So I do think that it does matter what's happening, and maybe, although the stock market, for example, in the U.S., it doesn't show too much sign of pain, where the pain in the real economy might be coming through is through what we're seeing in the currency, which is persistently weakening. And as I mentioned, the Fed and the FOMC are still big players in this space. And ahead of that September the 16th meeting, the market will start to wonder what's coming next in terms of dovish policy innovations.
And talking of pain, Shahab, Tom asked me earlier on what impact a £131 has on businesses here in the UK. Let's talk about the euro in that context. How worried would the ECB about a 119 handle on euro dollar, up 0.6% just in today's session?
I really don't think they'll be too worried about it at all, to be honest with you, because firstly, European inflation expectations are still moving, broadly speaking, higher than market-based numbers, albeit from a very low level, but it's not as if they are imploding simply because the euro is rallying. Secondly, the headline level of the euro-dollar rate, yes, it obviously catches the attention of markets, but is it something that at this level is something that's a problem, for example, for German exporters? We don't think so, not compared to the impact of broader global demand, which is a far bigger driver of what happens to euro area exports. So from our perspective, no, I think we need to see euro-dollar get to at least 130 before the ECB starts to ponder whether it's too high from those perspectives. So that gives us a lot of bandwidth still.
Shahab, just too short a visit. I'm sorry. We had that news on the Canadian finance minister that took some precious seconds away. Shahab Jalanous with Credit Suisse, and we'll get him back for a much deeper coverage. It's great to see the synthesis, folks, of what Mr. Jalanous is doing with their wonderful James Sweeney, who's just been, James Sweeney is a hugely optimistic guy, and I was shocked at his caution in our last visit as well. And I don't buy it for a minute. My history on this is these things begin to move, and all of a sudden politicians begin to talk. I really wonder, Anna, maybe I don't understand the United Kingdom, but I really wonder with a 120, a 122 euro, who starts talking first in Europe?
Well, we know there'll be a lot of talk. That's all we can say about these Brexit negotiations, or trade deal negotiations as they are. As we get towards the end of the year, there will be a lot of talk. But you know, Tom, they're still falling out about the same three things they were falling out a couple of years ago. It's all about the role of the ECJ, the Northern Ireland border, and fish.
And fish. They're still arguing about fish. I mean, this is one of the things I don't get, folks. Let's do this we can do this with Anna Edwards. Pharaoh would never do this, or Lisa, but the fish thing is like, it's like the determinant, isn't it?
Yes, I mean it plays well for various parts of the electorate, I suppose. It's a really small part of the economy. It punches above its weight in terms of generating headlines for something that is less than 1% of the economy.
No question of that. You know, why did I think I was going to wake up today and talk to Anna Edwards about fishing rights in the North Sea in the English Channel? Futures up 6, Dow futures up 49. Coming up on Bloomberg Radio, Mr. Dover, Franklin Templeton, head of their equities. We will look at that as well. Don't forget tonight, David Weston with our convention coverage. Will it be as successful as all thought last night was? Stay with us. This is Bloomberg Good Morning, a simulcast.
With the First Word News, I'm Ritika Gupta. Michelle Obama described President Trump as unfit for office. On the opening night of the Democratic Convention, the former First Lady blasted him for mishandling the pandemic.
More than 150,000 people have died, and our economy is in shambles because of a virus that this president downplayed for too long.
Obama said that Trump is clearly in over his head. House Democrats will propose an extra $25 billion in funding for the beleaguered Postal Service. Bloomberg's learned it will be part of legislation that would prohibit cutbacks in service before the election. A vote is set for Saturday. Democrats want the post office strengthened before millions of election ballots are mailed. In California, 10 million people avoided a blackout when temperatures fell. They may not be so lucky today. It's supposed to hit 108 degrees in parts of the state. That could force rolling blackouts designed to save the power grid. It's the first time California has resorted to the blackout since 2001. And in Hong Kong, Chief Executive Carrie Lam says she's having trouble using her credit cards. After U.S. sanctions were imposed, the Trump administration sanctioned Chinese officials and their allies in the city. That was in response to those sweeping new security measures that Beijing imposed. Lam calls the measures against her totally unjustified. And consumers splurged on do-it-yourself projects in the second quarter. Home Depot reported sales growth that was more than twice the brisk rate that analysts had been expecting. Same-store sales rose more than 23%. Revenue also beat expectations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Period of deglobalization, we're not going to get that disinflationary impulse. Inflation is headed higher. So there's no point where I would say, gee, we should buy treasuries here.
Barry Knapp has been around the block a number of times with Ironside Macroeconomics, and he knows if you're not in the game, you don't get the reward. Another Barry knows that as well. His name is Ritholtz, just a terrific podcast. Masters, I'm just jealous that Ritholtz gets to do Masters in Business, these long conversations with all sorts of interesting people. And he actually manages real money where he enjoys occasionally losing money as well. We're thrilled that Barry Ritholtz could join Anna Edwards and myself this morning. Futures up 6, Dow Futures up 41. On Bloomberg Radio and Bloomberg TV, Barry, I want you to explain the street fixation, which is always there, in this case on Apple, on Amazon, and how you can get the same return from something as boring as a 2x4. Home Depot, the last 10 years, up 28% per year, and Ken Langone doesn't get any of the sex appeal and that je ne sais quoi of Tim Cook, does he?
Right. Well, hindsight bias. Now everybody knows that a pandemic is going to cause a lot of people to flee to the suburbs. Well, look, when we look at technology, they're really game changers. The world is different because we walk around with a high-powered computer in our pocket. We have connectivity wherever we go. We're mobile. Look at how Amazon has changed the nature of retail, how Microsoft has changed the enterprise. And so we're fixated on the companies that have a giant impact on our lives. And not surprisingly, those companies are within the big indexes.
Is Home Depot a technology company?
If you want to make that claim, you could say they're a logistics company with an online presence. And if we look at Walmart or Home Depot or Amazon for that matter, there's a lot of technology used in the logistical process, but they are not in the business of selling technology. And I think we need to separate the companies that sell tech and the companies that use tech very effectively. Amazon does a little bit of both. Apple clearly does a lot of both. And Home Depot sells basic building supplies, but they're a big user of tech. And that is a big reason why they're as profitable as they are.
Barry, good to speak to you. Yeah, that makes me think of Ocado here in the UK, which is a grocery retailer, or that's what many would have assumed years ago, but it's always said it's a tech company, and part of that is because it sells its tech, it sells its services to other grocery retailers. Why are you not concerned then, Barry? I read your piece this morning. Why are you not concerned about the dominance, the percentage of market cap that tech takes up in the S&P right now? Why is this quote-unquote normal?
Well, you look at the history, go back 40 years to 1980, the concentration of the 10 largest companies in the index has bounced back and forth between about 17.5% and about 25.5%. And we saw that really spike following 3 months of lockdown when the rest of the index basically fell out of bed. You know, you could take the 10 biggest companies and equal weight them in a portfolio. They're up nearly 40% for the year. Do the same thing for the remaining 490 companies. They're down about 8% for the year. So it's not a surprise given what's actually happening with the lockdown and how many industries from retail to restaurants to travel to hotels that are doing so poorly. It's not a surprise that we see a heavier concentration in the global companies that are actually thriving when people are forced to work like this, to work from an office in their house, as opposed to commuting into the city and going to their jobs.
And what does history tell us then, Barry, about the way that this unwinds? You know, when this lockdown is a long distant memory and I don't have to spend my time sitting in front of this fireplace anymore here at home, what do we know about how tech will respond? Will tech sort of collapse back into the pack, or will the pack catch up with tech?
I think it's more of the latter. What typically happens when we come out of a recession, the companies that have been doing poorly for a variety of reasons, they lack access to capital, their customers lack access to credit, they're not selling into the international markets. All those companies, when the economy recovers and when we finally come out from this pandemic-induced lockdown, I would imagine they're going to catch up somewhat to tech. And how much does it take to bring the Big 10 down from 27% to the more normal range under 25%. It doesn't take a whole lot for the rest of the index to just normalize a little bit, and suddenly tech is back in its historical range.
Barry, a side question here to end on. What does a weak dollar mean for our multinationals?
Well, it depends if they're exporters or if they have local companies or local branches where the currency is almost irrelevant. It's almost neutral. What the weak dollar means is that exporters from the U.S., you know, it's a little bit of a tailwind, but think about what it does for commodities. Think about what it does for the price of things like timber and gold and copper. You know, when the measuring stick gets smaller, well, their prices go up. So theoretically, we could see some increased input prices that might cause some modest inflation down the road. I'm not in the full inflation and certainly not in the full hyperinflation camp, but I wouldn't be surprised to see inflation get over, you know, this very low level we've seen, maybe even run 3.5% for a couple of quarters, 4% temporarily, but you know, it's a temporary phenomenon.
Listen to you. Wow. Yeah. That's not priced in. Barry Ritholtz, thank you so much. Greatly appreciate that today. Of course, look for his podcast, Masters of Business, his writing for Bloomberg Opinion as well. And I thought we'd get to a 132 on sterling. We only got to 131.99. Weaker dollar, stronger sterling. Anna Edwards killing it in her portfolio.
Well, if I could travel, maybe I would. It would go further, wouldn't it? The pound in my pocket, but I can't go anywhere. I guess I can import. But the euro, really interesting as well, Tom. You know, the weakness in the dollar is part of the story. The strength in the euro, up 0.6%, 119.37. We heard from Credit Suisse earlier on that actually this won't worry the ECB. It has to be 130 to worry the ECB.
No, it's amazing to see. And a weak dollar has been over the last hour. We've really broken out to new weakness. The bond's pretty quiet, actually. 10-year flat, 2-year comes in 2 basis points, 142. There's a modest curve flattening this morning. The equity markets have really done nothing. I'm not sure what that means for the opening. Futures up 6. NASDAQ does pretty well, up 51 points. Dow futures up 54 points as well. And the VIX, 21.38, nowhere near breaking through to a 20 level, but there it is. Lots of good conversations through the day, and of course, we'll be looking at the politics for someone who served in the political space as well. Ralph Schlosstein, Evercore, their co-chief executive officer. Look for that in the 12 o'clock hour. Somehow, politics will come up. We thank all of you for listening on Bloomberg Radio, for watching on Bloomberg Television, to our simulcast. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index, true diversification.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
From New York City, for our viewers worldwide, I'm Taylor Riggs, and for Jonathan Farrow, the countdown to the open starts right now. And we begin with the big issue, from equities to treasuries to gold, nearly every financial asset rising in unison. Investors weighing in on the everything rally.
Momentum is pretty powerful right now. Equities are rallying.
The breadth of this rally starting to go beyond just those big tech names.
Gold has been rallying.
Oil has had a huge comeback.
Treasury's going to edge up.
This is very much a liquidity-driven bull market.
As long as there's confidence in the support of central banks.
This is all about the perception of policy support.
These market technicals can take us quite a long way.
We're still quite constructive.
Until you get a big shock.
There are some risks of this rally stalling.
Consumer sentiment remains extremely weak.
Any hiccups relative to fiscal policy support, in particular, inability of Congress to come to a quick conclusion on stimulus, could derail the rally quite easily.
Bloomberg senior markets editor Scarlett Fu joining us with more. Scarlett, everything just keeps going up.
It just keeps going up, Taylor. And of course, when you get punished for holding cash, everything else looks attractive by comparison. Now, since the COVID pandemic began in March, risky assets, we're talking growth stocks and oil, are up more than 60% in 5 months. Safe havens, gold, and the highest rated corporate debt up at least 30%. And the backdrop for all of this is negative real rates. The Fed, of course, cut rates to zero, launching multiple programs to keep credit cheap and accessible to companies and households. That has driven yields lower on treasuries, despite a blip higher last week. Meantime, Washington is spending like it's never spent before. We're talking about PPP, enhanced jobless benefits, even with all the squabbling right now between Democrats and Republicans for the next phase of stimulus. The question has never been whether it would happen. It's all about how much to spend. So this powerful combination of monetary and fiscal stimulus means yields will stay under pressure. But all this government spending is leading to higher inflation expectations over the longer term. So the difference between the 10-year yield and the yield on the 10-year tip has been sinking. It fell to as low as negative 1.08% in, let's say, August 6th. Still around negative 1%. It's come back a little bit here. Now, of course, Taylor, you know that negative real rates is nothing new in Japan or in Europe, but its shift here in the U.S. is showing up across asset classes. Equities, the obvious beneficiaries. You look at the NASDAQ 100, up 61% since late March, but the MSCI All Country World Index has done pretty well as well, up almost 50%, recovering almost all of its losses. It's about 1.5% shy of its record high. And since March 23rd, it's added about $22 billion in market cap. You look at positioning as well, because there's not a whole lot of appetite to hedge against declines in equities. The put-call ratio is at a 7-year low. The lower the number, the more demand there is for calls. These are options to buy stocks. So the higher stocks go, Taylor, the more investors feel compelled to join in or risk being left behind. You've got FOMO and the Fed. It's a pretty powerful combination.
I think we've had FOMO for a few years now. Thank you there, as always, Bloomberg Scarlett Fu. Now, JP Morgan's Bob Michael saying it is up to the government to provide additional stimulus to keep this rally going, writing, quote, There's not much more to expect from the Fed, other than perhaps ever stronger forward rate guidance or implying yield curve control. The absence of fiscal support will mean greater economic headwinds as the economy reopens. And Bob Michael joins us now on the phone. Bob, is the monetary policy overcompensating for the lack of fiscal stimulus, do you think?
No, I don't think so. I think monetary policy got exactly to where it's supposed to be, which is you've had a crisis, the likes no one has ever seen. Central banks have thrown everything at it that they could. They've cut rates to zero or negative. They're expanding balance sheet. They're providing liquidity facilities. They should just drop the mic and walk off stage and say, job done. It's going to take years for the output gap to close. What will speed that along is adequate fiscal response, and that's what's missing now. So I think the narrative has shifted from monetary policy to fiscal policy this month.
Bob, in the absence of fiscal stimulus, monetary policy steps in, and we're lower, and for how much longer?
Well, that's a really good question. And I know you covered negative real yields. And it's a reminder that that government bond yields are actually anything central banks want them to be. And right now they want them to be negative on a real yield basis. And they're looking at a choppy recovery. We'll see how the reopening goes. I think they're also looking at the trillions of dollars of debt that are being piled onto all levels of government, to businesses and to households, and wondering how long will it take to repay that. So to answer your question, let's start with the 7 years it took the Fed to raise rates after the financial crisis. Remember, they went to zero December 2008, and they first raised rates December 2015. Maybe they learned a little bit from then. They could, maybe have done it a couple years earlier, but I think the severity of this crisis and the unknowns out there, 7 years is a pretty good target in mind.
Bob, it's interesting. We've been range bound in 10 years, 50 to 70 basis points or so in the past few months. What will it take to go significantly below 50 basis points, in your opinion?
Well, I think it will take a significant decline in either inflation or economic activity. And both of those things are possible. We'll see how the transition to an economy that's reopened at a fraction of what it used to look like pre-crisis, how all of that unfolds. If that leads to a risk-off environment and profit-taking in a lot of the sectors that had benefited, yeah, you could see money take Treasury yields down to zero.
I'm curious about what that does. If you have that 10-year, 50 basis points or so, and as you mentioned, rising inflation expectations as of late, we know that the gap then for that negative real yield is widening 1%, 1.3%, anywhere between 2s going out to 10s. What are those negative real yields telling you, and what is it doing then to risk assets?
Well, it's telling us a couple of things. One, it's telling us that the Federal Reserve believes that the cost of funding for the recovery needs to remain very low, negative on a real yield basis. I think they're right. I think that the last thing you want is for companies to worry about the debt they took on to make it through the crisis. And if the cost of servicing that debt is too high, how do they respond? By cutting costs, and that could lead to higher layoffs. So that's one of the things that we're watching in here. And the other thing it's telling us is the Fed just doesn't believe the inflation prints where they are. Sure, there's a supply side shock as a lot of manufacturing facilities have been shut down. When those start to come back online again, maybe we'll see inflation roll over.
Bob, I want to talk about the health of balance sheets. We had a really interesting headline cross the terminal yesterday. Corporate investment grade issuance, and it's only August 15th, at a record $1.342 trillion. Are these companies that are issuing debt zombie companies, or are they inherently supported by the Fed, and this is just smart companies taking advantage of free cash?
Well, we've seen Apple and Google come to the credit markets with jumbo issuances. They're certainly not zombie companies. I think you've got a combination. There are those that need to access funding to get through the next 6 to 12 months, and they're doing that. There are others that just see an opportunistic way to put cheap capital in place, more or less cheap equity in place for a period of time, and they're doing that. I think one of the things that's worried us is that corporate America came into this crisis probably with a little too much leverage. After 10 years of austerity, they began to borrow, buy back shares, raise dividends, buy each other, do things that would benefit shareholders. So they got caught a little bit offside by this, which makes it even more imperative for the Fed to be patient and keep rates low for an extended period of time.
So if you don't fight the Fed and you believe that they will keep rates lower for an extended period of time, do you stay in investment grade, or have you started to dip down into a little bit of that high yield, given the Fed has said that they like fallen angels, and if you were downgraded post March 23rd, they'll still support you?
Well, the market has moved very fast, and we're at a point in time where co-investing with the Fed has worked. So buy the things that they're buying, it's done well. The other thing that's happening very quickly now is that investors are looking at things that fell through the Fed safety net. So a lot of the high yield market, some of the securitized market, emerging markets, things like that. And they're making a determination of whether the borrower is money good or not. Does it have a business profile that can survive, say, another 10 to 12 months of semi-quarantining? If so, money's going in regardless of the valuation. Hence, you get somebody like Ball Corp, which is in the high yield space, borrowing at less than 3%. Those companies in industries that look like they're going to be challenged going forward, those continue to sink and are likely headed to restructuring. So I think you make that determination. Who's going to come out of this okay, and regardless of the valuation? I hate to say that. You put money in there because that's the way the money is flowing currently.
Bob, I'm trying to go global with you, given your title as Global CIO, and I'm trying to remember the math, and I'm going to have to go back and study, and I need you to help me on interest rate parity and where we go when we're looking at not only a weaker dollar here in the U.S., what that means for global bond yields, and then, of course, with yields, even though it's only 50 basis points or 70 basis points in the U.S., still relatively higher than the rest of the world. What does that mean for you on a global perspective?
Well, it means a number of things. It means that you have to look at other markets and say, is the policy response correct? Do you have countries and economies where the healthcare policy response, the fiscal policy response, and the monetary policy response are all synced? And I think we've seen Europe benefit from that over the last month. So money is going into those markets, and we've been part of that. So peripheral European government bonds, things like Italy and Spain look attractive, and the corporate bond market has looked attractive. The other thing we're seeing, though, is flows pouring into the U.S. bond market from overseas. So those markets that have negative yields or zero interest rates, whether it's Japan or parts of Europe, are looking at the U.S. market and saying, you know what, as the yield curve in the U.S. has steepened, the cost of hedging has diminished relative to what we can buy in that market, and there's a chance for some capital appreciation there. So money continues to pour in. It goes back to something I heard you and Scarlett talk about earlier, which is people feel squeezed out of cash and are looking for anything that makes sense in the bond market.
Finally here, what's the biggest downside, left tail risk that you see on the horizon?
Well, I know everyone's talking about a dramatic snapback in the economy because of all the stimulus and an inflation surge, and then bond yields look just outdated and way too expensive. We hope that happens. The U.S. has been trying for over 10 years to create higher inflation expectations with limited success. I think the real risk is that as we get into next year, we find out that the U.S. economy is going through a transition. Maybe it's to faster digitalization, and at operating at 90-95% is painful. And the road to recovery just takes a lot longer, and rates are a lot lower for longer.
Lower for longer. We keep hearing that theme. Bob Michael, thank you, as always, for your time. Coming up, fund managers, well, they're overseeing $500 billion, and they are finally trusting this bull market. That conversation coming up next with Invesco Senior Portfolio Manager, Alessio DeLongis. In the markets, futures catching a little bit of a bid on strong housing data this morning. 33.86, spot 15 is the record we're looking for. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The U.S. no longer has the interest rate advantage it had versus the rest of the world, and the U.S. is the most defensive market in the world. So if you postulate that the globe is going to do a little better economically, non-U.S. markets are probably going to do better. And then you layer on top of that the dollar weakness we've experienced, and I think non-U.S. international stocks do a bit better.
Nuveen's Bob Dole making the case for investing in Europe over the U.S. The August Bank of America Fund Manager survey revealing that, well, he's not alone. The survey showing, quote, green shoots for inflation, assets, and rotation to Europe and emerging market stocks. Bloomberg's Abigail Doolittle joining us more with highlights from that survey. What did you find?
Well, Taylor, super broadly and stepping back, the 1,000-foot view, this Bank of America survey for the month of August, the fund manager survey, is the most bullish since February. Now, before that worries you too much, let's dive into it a little bit. Because of that bullishness, it's based on the fact that global growth expectations are the highest since 2009 coming out of this pandemic crisis. Assets the most overvalued since 2008. And agreeing with Bob Dole, EU equity assets are the most preferred area on a global basis. Now, as for the most crowded trades that Bank of America is seeing right now, these won't surprise you all that much at all. Long U.S. tech, long gold, and long corporate bonds. As for U.S. tech being super crowded, the NASDAQ, as you know, is up 67% from the March low. Really pretty incredible. Gold up about 40% from the March low. The one that really surprised me, though, LQD, the corporate bond ETF, up about 30% from the March low. So again, those are the most crowded trade at this point in the rebound rally. Now, the biggest tail risk, those aren't so surprising either. This possible second wave of the virus, U.S.-China tensions, and the election. Now, something that also caught my eye, Taylor, the bulk of the managers surveyed, they see a W-shaped recovery. As for what everybody fears, a possible, what they are calling, Bank of America is calling a disorderly stock correction, they're saying that would only come if there is a disorderly rise in rates. But right now, again, the most bullish survey of fund managers from Bank of America since February of this year.
Incredible. Bloomberg's Abigail Doolittle there. And Invesco's Alessio DeLongis in agreement with that manager surveyed, favoring Europe over the U.S., writing, quote, "We hold a large underweight position to U.S. equities, especially in quality and momentum stocks. Recent economic data shows that more regions around the world have now entered a recovery regime, with Europe and emerging Asia still leading the way." Alessio joins us now over the phone. Alessio, I'm curious if this is a growth story abroad, a weaker dollar story, or just pure cheaper valuations overseas that you like?
Hi, Taylor. Thank you for having me. It's actually a combination of these three factors. The different weightings on these three factors play, however, it's important. International, so non-U.S. markets are showing more favorable valuations on local currency terms, especially after a decade of dominance of U.S. dollar-based assets. The currency component on top of the local market component also shows favorable valuations, as the dollar is about 5 to 10% overvalued in our opinion, and currency fluctuations tend to overshoot their value meaningfully over a 7 to 10 year cycle. And in addition to top all of this, what's important is always the catalyst, because valuation by themselves don't make a trade in our opinion. And the catalyst is more favorable cyclical conditions for emerging markets, especially emerging Asia and the European continent, where we see the growth rebound leading the way compared to the U.S. growth story.
Okay, and I understand that, except that the all-world country index looks great. You remove the U.S., the picture doesn't look so good. What makes you think that you can be underweight U.S. right now when really the trade over the last few years has been U.S. versus rest of world?
Absolutely. What you're asking is the question, why now? What has changed, right? Because several of these arguments, especially on the valuation front, you could have made years ago. I think what is changing now is exactly that inflection point. And there is two catalysts here that are worth watching. The growth differential, market expectations for that growth differential are now turning in favor of international markets outside of the U.S. We're talking really about that second derivative of growth, the simple fact that emerging Asia and Europe came first into the lockdown and the contraction and are actually also leading out of it first. That is an important story. And secondly is what you alluded earlier with respect to the dollar. The dollar was holding a meaningful interest rate advantage in order to continue to attract capital flows. That interest rate advantage has now evaporated. That yield differential to the euro is now just 80 basis points on an annualized basis, even on over the next few years when you look at the forward curve. And the current account differential is meaningfully in favor of international markets. So U.S. assets between valuations and yields are not offering that large cushion to support an overvalued asset market. And I think that's what that catalyst is. Could we be wrong by a few months? Of course. But I think now is where the reward for the risk is starting to look more attractive.
Alessio, your biggest downside risk, similar to Bob Michael of JP Morgan, who we just spoke with in the previous segment, is a lack of fiscal stimulus. In the event of a lack of fiscal stimulus, does that further increase your rotation out of the U.S. into the rest of the world, thinking Europe, who got their act together and got that stimulus package done?
It's an interesting question, and one that I think it may have a surprising answer. I think the risk is more that with lack of fiscal stimulus, even in the U.S., given the importance and the size of the U.S. economy for global growth and the importance of the dollar as the reserve currency, lack of fiscal stimulus in the U.S. could actually trigger a broad risk aversion setback. And in that environment, the defensiveness of the U.S. dollar and the defensiveness of U.S. assets may actually lead to U.S. equities or U.S. assets outperformance, U.S. dollar outperformance, despite the fact that that fiscal stimulus would be missing. It's really a question of whether the fiscal stimulus challenges the overall growth picture or only the U.S. growth picture. And I'm afraid that given how weak global growth conditions are, missing fiscal stimulus from the U.S. may be a risk for overall global growth.
Yeah. Alessio De Longis, always need more time with you. Thank you. And stay with us, because coming up, the analyst action you need to know. That's next in our morning calls. And later, Northern Trust Katie Nixon joins us for the opening bell. All still ahead. Futures in the market still turning slightly positive. This is Bloomberg.